largest television broadcaster in the U.S. with more than 200 stations and 116 U.S. markets. It also owns, national networks News Nation and the CW. Tegna owns 64 TV stations in 51 U.S. markets. G's probably selling it.
There you go.
What do you think? No?
About this deal?
Tegna?
Yeah, people have been talking about this kind of deal for a long time. This kind of thing. Which is what the regulators will allow. Tegna? That's how you pronounce it.
That would pronounce it. Reading. Doesn't say your name. Does it say Fat Andrew? No, it says Fat Joe. Coming up, the White House reportedly...
Yesterday's price is not today's price.
The White House reportedly looked right at me and said, Fat, they're looking to take a cut of NVIDIA's AI chip sales in China. Analyst Ray Wong's going to join us right after the break.
Welcome back to Squawk Box. Some big tech stocks in focus this morning. Reports say that NVIDIA and AMD are going to pay 15% of China chip sales revenue to the U.S. government in exchange for export licenses. Joining us right now is Ray Wong. He's Constellation Research founder and chairman. Good morning to you. You call this a payoff, a tax, a bribe? I don't. There's a lot of words that are being put out there. What is this?
Use the E word. You want to?
What's the E word?
Extortion.
Oh, extortion. I didn't say it. Joe said it.
No, I didn't. You were thinking it. I gave it.
I didn't use it.
I was just helping. It's helping you.
So, Ray, what is it?
You know, happy Monday. It is bizarre. It is the B word. What is really weird is the fact that there's a 15%, let's say, cut that the government is taking. But the challenge here is, are these chips national security issues or are they not? If they are, then why are we actually allowing the sale? And so we've got an interesting situation with the H2O chips from NVIDIA and the MI308 chips from AMD. They're inference chips. If they're being used by the Chinese government and Chinese military for advanced AI use, does that constitute a national security threat? Or are we in a situation where both NVIDIA and AMD believe that they're 2 or 3 generations ahead of the Chinese and they're not even worried about it? And so I think that's the first question. Is it a national security threat? And if the answer is no, fine, okay. The government's taking a cut out of it. They cut a deal somewhere. Both NVIDIA's Jensen Huang and Lisa Su at AMD both decided that, okay, we've got a way to get our chips into China, and maybe there's something good coming out of it. But it's hard to tell, and I think we're going to have to look at the details to find out.
Well, as an investor, though, do you say, great, I'm cool with this because the stock's gonna go higher? The stock's not going higher this morning, by the way, but I mean, you would think if the market opens up, good for the investor or not?
Well, for the investor, these Chinese chips the sales into China for chips haven't been that profitable yet. And so they could generate another 3 to 5 billion by the end of the year for both NVIDIA and AMD. But as an investor, you're worried because then is this an arbitrary decision by the government? Does every president get to play kingmaker in terms of these deals? So I think that's really what the concern is. And we still have additional tariffs and trade deals to come from the China negotiation. So we're not sure exactly if it's over yet. But if this is a way in, it's actually interesting because the Chinese government is also poo-pooing the H2O chips and the AMD chips, telling their teams that, hey, we've got a backdoor here. There's something that might be, security issues on the other end. So I'm not sure exactly what's going on here because China's not welcoming of the chips, telling their teams not to use it, and the U.S. is saying take a 15% cut. So I'm not sure exactly what the story is on this.
And so the real investor question is just, what does this look like come this fall?
Well, it comes this fall. If the chips continue, there's a revenue stream here. You might get 3 to 4 billion out of this on both ends. If the Chinese continue to use the software layer from NVIDIA, which you saw, the CUDA layer is kind of the piece that accesses the technology. We're also seeing the Chinese actually hack through the CUDA layer and actually making a lot more efficient than what we have today, then that's a good thing. They're adopting American technology. The U.S. companies don't feel like it's going to be a competitive threat or a national security issue. It's good for investors. But if it turns out that this is just one part of the pawn in terms of the overall strategy that's going on with the China negotiations, then that's not a good thing. So it's hard to tell yet.
Okay, Ray, I want to thank you for joining us this morning. It is a fascinating one, and I'm sure we'll continue to debate it. Thanks again.
The B word.
You bet. Meantime, it is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC on a summer Monday. A summer Monday. Is that what this is? It's not a summer Friday, I'll tell you that.
Hot, yeah.
I'm Peter Osdorf, and Joe Kernan is here. Becky's off. Our top story is the one we've been discussing all morning, trying to make sense of it. Reports now saying that NVIDIA and AMD have agreed to pay 15% of their revenue from chip sales to China in exchange for licenses to sell those chips to China. Lots of questions about what that all means and where this all goes next. Maybe other companies get on that list. We'll see. Meantime, Intel's CEO is planning to visit the White House today. This after just a couple of days after the president said that that executive should step down from his post. Be an interesting conversation. According to the Wall Street Journal, they say that he's expected to brief the president on his professional and personal background. And as we mentioned in the last hour, American companies repurchasing their shares at a record pace. Nearly $984 billion worth of buybacks announced so far this year. Among the biggest repurchasers, Apple and Alphabet, and the big banks including JP Morgan and Bank of America. Cue Elizabeth Warren at some point, or somebody, to say that the buybacks should be reinvested, all that money should be going into the companies.
It's inane, but it is certainly not her most inane.
Well, I'm not even going to comment on her.
The price gouging, look, you can go across the board. It's I guess in Massachusetts it flies because she keeps getting reelected. Here's
the sad reality.
Yeah.
The sad reality is that there is not enough opportunity. There are not enough fabulous opportunities.
Unless you think that your company is a great place to, I mean, you can look at it half empty or half full. They don't have anything else to do with it.
I'm just saying, we talked to Dara last week from Uber.
Yeah.
He's going to buy back $20 billion of Uber's shares. I'm not saying that's a bad investment. It may be a very good investment. All I'm saying is, in a great world, you would wish that he was out there and thought to himself that there was some
not necessarily.
newfangled,
Look, it's just
autonomous
look, if you get
car thing, and
so
that he
then
would prefer
if
to
it's
do
that good, then issue triple your float every year. Triple your float every year and just buy all this great stuff you're talking about. You don't know what the right number of outstanding shares is for any of these companies. Well, the CEO has to decide that. The board has to decide that. It raises earnings per share. It benefits.
I understand that. All I'm saying is, I wish that there was.
What if they've issued too many shares? What if they've issued too many shares?
So many plentiful opportunities out there.
Then double your float every year and just find. Raise everyone's wages and expand.
I didn't say any of these things. Wait, now you're just making things up.
Okay, so you're saying invest in all the opportunities.
Yes, I'm saying that there's right now. No, if you talk to most CEOs, they'll say they don't think that there's enough opportunity, enough value given all of the money that they are producing, and therefore, by the way, it may be the right decision. I'm not saying it's the wrong decision to buy back your shares.
Right.
I'm saying I wish that we were in a world where there were so many plentiful opportunities that every company was saying, you know what, I'm going to go out and spend all that money.
But Andrew,
investing in all these other things.
knee-jerk. Seriously,
I am not.
When Elizabeth Warren talks about, she thinks the CEO, she thinks the buyback, because someone's buying the stock that day, the price will go up a little, and he's got options that come due, or he or she has options, so he's enriching himself, and it's all about that has. There's a lot of different reasons you would buy back stock.
There's a lot
and it's
of
almost
reasons.
like dividends, except it's more tax.
But all I'm making the argument is there's one way to actually make your stock go up, typically, is to buy back the shares. That is true.
That's because it reduces, not in a bad way, it reduces.
No, it's good for investors. That's why you would do it.
Your share of the company is increased.
Correct.
So earnings per share goes up. There's nothing wrong with that.
Our argument about there isn't, except that it's not except, and one of the other benefits of doing that historically is if the shares go up and you own a lot of the shares, you too benefit.
Along with the shareholder.
Along with the shareholder.
Right.
Yeah.
To just automatically say it's just.
I'm not saying automatically. I'm saying.
She never makes your point. She never says that they should have other things that they should want to invest in other than raising wages and, paying, I don't know. I'm not sure what the.
No. I would much prefer that companies be able to take their cash if they have it and go, to the extent there's great opportunities, to go invest in those opportunities.
Well,
I love that.
I would come at it from a different, I'd say the Kodak situation.
Right.
The GE, the Jeff Immelt,
You got to transform your company.
Yeah. No. They were buying back stock. They said my Kodak stock at 80 is undervalued, and it went to like.
Well, and that's the other problem with
that's buying high and selling low.
Well, that happens too. And by the way, right now you would say, interestingly, I think
you might
people think the shares are high.
It might be.
Maybe.
Checking the futures. Dom Chu has got stuff to talk. I'm sure he was totally glued to. Well, we'll talk about that later. Let's talk about that. Did you ever have 6 birdies and 8 holes? I don't think I have, Dom.
No, my name's not Justin Rose either, so that's
6 birdies and 8. 6 and 8.
Yeah.
That is.
It's pretty.
That's strong. On those holes.
It is pretty good. The other one I want to pay attention to is, I don't know, you didn't pay attention to the Corn Ferry Tour. Christo Lamprecht won by chipping in or basically pitching in on the last. I mean, there was a great weekend of golf, no doubt about it. So
it was. I didn't see that. You're right.
I will
some stuff about Corn Ferry. Yeah.
Oh yeah. I will get to that after that. I get this one done, and then we can see if there's any time left for our little golf dinner. All right. So we're going to start off here with a check on cryptocurrencies, mostly because stocks like MicroStrategy and Coinbase are moving to the upside pretty decently. So they're some of the biggest leaders in the Nasdaq 100 and the S&P, as Bitcoin kind of hovers right near its record high. That's a big increase for Bitcoin prices. They were trading just around $114,000 as recently as the beginning of this month, August 1st. Now it breaks a slide for Coinbase, which has fallen in each of the last 3 weeks. MicroStrategy popped last week, but still fell 3 out of the last 4. But Bitcoin prices, remember, 123 and change is the record high that we saw back in mid-July. We're at 121,062 right now. Meanwhile, you got shares of CoreWeave ticking higher this morning to the tune of about 3.5% after a pair of bullish analyst calls at Citi and JP Morgan both reiterate their overweight ratings, and then JP Morgan increased its target price to $135 from $66. Citi maintained its $160 target price. Both are seeing stronger demand for artificial intelligence as a boon for the stock ahead of its second quarter earnings report tomorrow afternoon. Citi expects a double-digit percentage revenue beat. JP Morgan warns there could be some near-term volatility given the strong expectations, but remains optimistic over the longer term. So CoreWeave up 3.5%. And we'll round things out with shares of Albemarle surging this morning after reports from multiple news outlets that Chinese lithium giant CATL has suspended operations at one of its biggest lithium mines. Albemarle is a beneficiary of that suspension. They operate multiple lithium mines across the world. That stock is the leading S&P 500 gainer in the pre-market. The shares right now up 10.5%. So, Joe, a lot of movers out there. And I, for one, am going to pay very close attention, not just like this past weekend to the FedEx, St. Jude, but now the BMW championship is coming up, and that's always a fun one as well. So.
JJ Spawn, shot for shot, too. I mean, in long putts, just, and that one that it looked like it was in, that would have won the tournament. That was unbelievable.
And by the way, JJ Spawn just punched his ticket to the Ryder Cup because of that performance.
I would have. Would have to be a captain's pick. He's been cool under pressure, you would think at that point. Wouldn't you think, Dom? Tommy Fleetwood will get there too, I think. Although, I don't know, man. That one shot in, and you see him come out of that putt, came out of that really fast.
On 17, you mean, yeah. So here's what I would say. I think, like many other golf fans out there, it's not that we were rooting against people like J.J. Spawn or Justin Rose. We were just rooting for Tommy Fleetwood because...
But he's won, though, in Europe. He's won a lot in Europe.
It's just the PGA Tour. It's just
he
elusive.
Can win. It is.
And anyway, I'm hoping Tommy gets his win soon. So
and then there's a guy who you would say didn't have his A game, who was like finished a stroke back or something.
Scheffler. Yeah.
Unbelievable.
Great
fun. Fun. All of this analysis available on the Golf Channel. Maybe we ought to do a dual thing. When we're at
this is the power of Versant coming up, Joe. Right. So this is what's going to happen in the coming months.
About that. Maybe we're auditioning. Andrew's going to be.
Yesterday's price is not today's price.
He's going on MSNBC. I'm going on the Golf Channel. Coming up, the NASDAQ trading at record highs, and crypto is surging this morning. We're going to talk strategy with Jason Trenner next. Later, though, the data on the return to offices showing a decline in remote work. Boo-hoo. Squawk Box will be right back.
Washboardjim.com.
Fed Governor Michelle Bowman says she's more confident now in her forecast that the central bank should cut interest rates 3 times before the end of the year. Bowman argues that recent weak job data underscores her concerns about fragility in the labor market. She made the comments over the weekend at a bankers conference. No, it wasn't in Skokie, Illinois or somewhere. It was in Colorado. I mean, if you might as well, right? Bowman was one of 2 FOMC dissenters who voted to cut rates at the July meeting. And she says she's growing more confident that President Trump's tariffs won't result in a persistent shock to inflation. We'll get more data on that front this week with the release of July CPI and the producer price index. The futures this morning are marginally higher. Join us now. You can see 134 points on the Dow. Jason Trennert, Chairman and CEO of Strategas Research Partners, a Baird company. Jason, we haven't seen you in a while. Were you surprised by either the break in the averages leading into Liberation Day or with the swiftness of the rebound to new highs following Liberation Day? Were you surprised by did you predict either?
I didn't. We didn't predict either, and I think I was surprised by both moves. I have to say, it's one of the strongest moves off a bottom there's ever been, and I think there was an overreaction to Liberation Day. I think people are starting to get accustomed to President Trump's negotiating style and starting to get accustomed to the idea that you can't react to every headline that you see, that things are likely to change, because everything is a negotiation. Everything is a trade-off. And that's the way the world is right now. We're deglobalizing, and that tends to lead to more, I would say, more political uncertainty. So we were surprised by both moves. We're happy about the move up.
Is there any way that the story today, buybacks are in vogue, and obviously there's money on the sidelines, and the economy has been, hanging in there pretty well. Are things happening in spite of all these things in the stock market, or can you actually credit some of the, I mean, maybe the big beautiful bill, maybe the expensing, maybe the deregulation, but are you convinced that the tariffs are a headwind, that we're still going to see the negative effects, or there really aren't as many? It's been overstated.
Joe, I would say you just mentioned it in brief. I think the one, the big beautiful bill, in my opinion, is a big part of the reason why the stock market is where it is, because I'm very, as you know, a very supply side person. And I like the idea of incentivizing capital investments, which the big beautiful bill does. So I think that's overriding the tariffs. I think markets, I tend to trust markets more than I trust people like myself, or economists, or strategists. And I think the markets, not only the stock market, but also the credit markets, I think are telling you that the economy can be robust to the tariffs, and is going to, from a longer term perspective, react to the incentives and, as you said, the deregulation that's being put in place.
As I don't know if you're a Reagan Republican or a classic conservative, whatever you want to phrase it to, does any of this border on industrial policy? But the NVIDIA news today, some of the president puts pressure on corporations to do things, and wants everything built here. All these things aren't classical conservative ideas. Do you have any problem with any of it?
Joe, I have to say, as you know, I was about ready to go into the administration, and circumstances changed for me in terms of my health. I'm a little hesitant to criticize the administration, but I will say I like free markets, and I don't like industrial policy. I think free markets are the best way to allocate capital. I know there are national security issues, and that those are other considerations that we have to keep in mind. As I said before, we're deglobalizing, so things are a bit different, but it is not part of the Reagan Republican conservative supply side playbook. But there are clearly other forces, perhaps national security issues, that are at play.
Well, there's that, and there's I don't know where we are right now in terms of total money taken in for tariffs, but it's adding up. Might be $500 billion, or could be eventually.
Right.
And then this is money. This is real money too. So, I mean, is it that simple? Can you just swallow some of your principles and say, look, we need the government needs the money?
Well, listen, Joe, there is, I think, an element of the idea that the tariffs, sterilize a little bit of the one big beautiful bill. If you were worried about deficits because of the big beautiful bill, you say, well, you have tariffs on the other side that will help that out. And so, you can swallow some of your principles in that way.
Well, what would you
I also
rather?
do understand Danny was on earlier. I do understand the populist part of this, which is to say that a lot of the policies, the globalization policies that we've had for the last 20 years, China joining the WTO, very good for the Chamber of Commerce, very good for the C-suite of American companies, but not good for the average guy. And I think that's what President Trump is getting at by these tariffs. That you say
The tariffs are. You could raise taxes on corporations, or you could do tariffs. You could put a 15% export tax on everything, or just do it on NVIDIA and AMD. It's almost like if you were only interested in principles and being totally consistent, you wouldn't do these things. But is there any way, obviously you just said you are, you can sort of look away, sort of ignore it and just say, look, money's coming in, the president's going to do what he's going to do until someone stops him. Is that a bad way to look at things?
Listen, Joe, maybe the more important thing is how's the market reacting to it. My opinion, of course, doesn't matter. Due to the fact that I'm conservative and a supply side person, it doesn't matter. You're looking at what's going on here. The big four technology companies are probably going to spend $300 to $400 billion in CapEx this year. I mean, that in and of itself is almost like in the old days, that would be like a fiscal stimulus.
Jason, here's my question. Here's my question to you, though. On two questions. You just mentioned the AI sort of ecosystem, which is propping up a lot of our economy right this minute. How much of that, I mean, it's a gold rush, but some people would also say it's a sugar rush, which is to say it makes everything absorbable today. Does it make everything absorbable later on?
Listen, Andrew, I think this is the real thing. I mean, I don't think this is a flash in the pan AI. I think it is clearly going to change business. So I don't think it's a sugar rush. I think this is something that's kind of here to stay.
Jason, the way I would.
I'm sorry.
Just the way I'm thinking about it, though, is not so much. Maybe I shouldn't use the phrase sugar rush. You and I think we both agree. Back in the late 90s, the advent of the internet was absolutely real, 1,000% real. I mean, we all were living with the internet in the most amazing way. Here we are in 2025, right? Having said that, there was so much investment to some degree at certain points, overinvestment, and that was the sugar rush of that period.
Right. I think, listen, in that period, I think that there were a lot of let's say fly-by-night companies that were IPOing. There are differences than versus today, where you have very established technology companies that are spending on capex. I also say that interest rates are stable, which is long-term interest rates are stable. 10-year Treasury, at 430, roughly 430, I think is important. I will say also, though, Andrew, the market is expensive by any metric, and we're watching the 10-year Treasury very, very closely. If it gets above 450 to 5%, I think the market's going to be in for some tough sledding, because that's
does the president pull back on any of the tariffs if in fact the bond market says no mas, we're not doing this? Because I think one of the other pieces of this is, you're right, right now the markets have said this is all cool, we're cool with this. But there's also, for some reason, an expectation among a lot of the investor class right now that prices are not going to spike. And I think that you talk to different CEOs and merchants, and they say, come this fall, we won't be able to afford to keep doing it this way.
Well, listen, I think we have a great person at the Treasury Department that's doing a good job of managing expectations in terms of the auctions and long-term interest rates. So I think that's going to keep things, I hope, a little bit more stable. But I'm not quite sure what President Trump would do if you had the bond market vigilantes coming in. I think for most people it would change their point of view, and I would suspect President Trump would be the same. I think you've seen that, post-Liberation Day. There's been moderation in policies when the markets seize up. And so until that happens, I think you're going to continue to see the policies that you've seen before, because President Trump would say, why should I worry? Everything I'm looking at, whether it's the bond market or stocks, is telling me that there's no problem. And so I'll keep going.
Okay, good.
That to me seems to be the what's going to happen, regardless of, perhaps what we want to have happen.
All right. Thanks, Jason. We'll see you again sometime soon. Thanks.
Yes, sir.
Okay, a lot more on Squawk ahead. The high-profile battle for top talent in AI. We're going to dig into the job market that has now been minting dozens of new billionaires this year. And then in the next hour, we're going to talk about the high-stakes meeting between President Trump and Vladimir Putin that's taking place in Alaska later this week. Squawk Box coming back after this.
Indeed.com/hire.
Welcome back to Squawk Box this morning. The battle for top AI talent is in full swing among big firms like OpenAI, Meta, Anthropic, and as Robert Frank told us last week, it's creating billionaires at a rapid clip. Joining us right now is Alex Heath. He is the deputy editor at The Verge. Thank you for waking up early, Alex. Love all of the things that you write. What is really going on? We talked to Sam Altman on Friday, and we're trying to understand sort of how big a pool there is among these talents. And I want to know what it is that they know that nobody else does.
I watched that interview, Andrew. He didn't really answer your question about the size of the market, did he? In reality, it's very, very small. It's smaller than most markets. At OpenAI, for example, their research team is probably 200 to 300 people. Their core research team, the people getting these really insane, sometimes 9-figure, even 8-figure offers. So this is basic supply and demand. The people that build these frontier models, there's just not enough of them, given the CapEx that's going to them just from the hyperscalers alone. If you're paying Steph Curry at the NBA $60 million a year in a market like the NBA that's doing $12 billion a year in revenue, why doesn't it make sense to spend $1 billion on the core team that's in an industry where the hyperscalers are going to do over?
Are they all Steph Curry though? I mean, that's the thing that I'm trying to understand, and I'm also thinking, if I wanted to be the Steph Curry of AI, what would I have to do to learn to be that? I mean, what is the experience that you'd actually need to have that kind of value prop?
It's someone who could potentially invent something like this new test time compute, this reasoning paradigm that we've seen with the latest OpenAI models, Google's models, those kind of step changes in how the models behave, where the companies that deploy these models can eke out billions more of revenue from them, can really generate a lot of hype. And this industry is just really new. There's just not a lot of people that have been studying this stuff. And so if I had to actually put a number on it, and I've talked to people who have a sense of it, there's maybe 2,000 people in the world max who could build a frontier model that OpenAI needs. So when you look at that kind of supply and demand with the CapEx being spent here, it actually makes a lot of sense. And there's a lot with how Mark Zuckerberg has been structuring these offers that it's also not as insane as people think. That's
what I wanted to ask you. We hear these numbers, $1 billion here or hundreds of millions of dollars there, and you also start to think about the culture wars that would take place inside a business where you have somebody come aboard. If they know that they're getting these kind of big paydays, I'm not sure why they wouldn't put their feet up on the desk. And by the way, what about the person who's in the cube right next to them who's not getting that payday?
Well, what's not being reported about a lot of these offers, especially the ones Meta's been making, is that they're structured like executive pay. These are not your typical restricted stock unit offers that big tech employees get where it's guaranteed on a vesting schedule. These are highly correlated to performance targets, both at the company level and at the individual level. They're structured like executive pay. You've got some VPs at some of these big tech companies that, because of the run up in the stock price, they're already making tens of millions a year. And these aren't even people in the AI field. So the money that's in tech right now is already very bubbly, and AI just adds a lot onto that.
Alex, help us with this. On the screen right now, you probably can't see it. It says Meta Platforms. Oh, actually, on my screen, not yours. Meta, Amazon, Apple, Alphabet. Alphabet obviously has an investment in Anthropic along with Google. How would you stack rank right now, given that I know you've played with ChatGPT-5? I did it all weekend, by the way. Joe, I still have not managed to make your app as well as it needs to be done. We'll work on that.
People are one.
I know they want that app. I know. Alex, so which of these, when you sort of stack rank the quality of them and how close they are or not in terms of quality, what does it look like to you?
In terms of the names on this screen, it's definitely Google number one. Google, out of all of big tech, is wildly ahead on AI. You've got Meta, I would actually put at number two, given the talent density, especially in the last few months. Amazon, and then Apple. It's really hard to overstate how behind Apple is right now from a talent perspective.
And where would you put OpenAI if it was on this screen?
I would put OpenAI right with Google. They're definitely, it's OpenAI, Anthropic, Google. Those three are always kind of neck and neck as the top place for talent. But in terms of the public companies, Google has a huge amount of talent density. A thing I've heard is that they're actually not even matching a lot of these OpenAI or Meta offers. They're letting people go because they know they have such a deep bench, and Gemini is doing so well for them.
What do you think Apple ultimately does then?
they need to make an acquisition. The problem is Apple has not been active in this space. They don't do investments, so the names that they would need to buy, Anthropic is probably the most obvious one. Anthropic has a huge ownership position on their cap table from Amazon. Google's also an investor. So the hyperscalers have already really put their names down on all of these big private labs, and Apple just hasn't been in this game, and they don't like to spend big. They're going to need to spend 50 billion plus realistically to get one of these core teams. And have we ever seen them do something like that? Not to say they couldn't, but it's just not in Apple's DNA. And they've also just been so out of the loop on this talent market today. It's really hard to see.
ChatGPT 5, good enough to, I mean, some people said it could be an Anthropic killer if it got the coding piece of this right.
Well, something people didn't really notice last week is that OpenAI got Cursor, the hottest vibe coding startup in the world right now, which I've heard is maybe a third of Anthropic's revenue, to switch to GPT-5 as their default model, which really shows how plug and play these models have become. And if you're Anthropic and you're just at the model layer and you don't own the consumer interface, you're really at risk of being disintermediated by a company with a better model, which OpenAI showed with Cursor last week.
Okay, final question, two actually, now that you're raising these issues. I always thought that the lock-in effect for this kind of stuff long-term would be the persistent memory. That's something that OpenAI does have right now. And I would imagine the lock-in effect that maybe Google could have, given all the data they already have from you, so that you wouldn't actually be swapping in and out depending on where the model is. You believe that or no?
I think that's totally right, but we're still so early in that. I mean, yes, ChatGPT has memory. It still doesn't work with all your apps. It doesn't work across your devices on your phone the way that it should. Google doesn't work across all its properties the way that it should, right? Gemini can't work with your Google Calendar. I think personally, I don't think it works as easy as it should. So yeah, that is the lock-in effect, is data and scale and network effects, almost like what we saw with social media, which is why you see these AI labs also thinking about social media and Grok being put into X, for example. It's that data flywheel. And so, yeah, OpenAI needs to do a lot.
Okay, Alex, they're playing the music out. So last question, we asked it to Sam Altman too. Elon Musk making this comment online about how Microsoft, or rather OpenAI, is going to eat Microsoft's lunch even though they're partners. What do you think he was trying to say, and what do you think of whatever he was saying?
He wants to eat OpenAI alive, so I think he's definitely going to say that.
Alex, thank you. Appreciate it. Nice to see you.
Do you watch Polymarket on this?
I watch Polymarket. I watch Kalshi. Yeah.
On who's got the best AI model?
Yes.
They're saying Gemini.
Gemini. A lot of people think Gemini is great.
It flipped with the introduction of when
I will say that, I don't know if Alex is still with us, ChatGPT 5, for me, has been a little bit slower.
And
because
Gemini, after that, Gemini is now...
It's interesting. No, so the issue for me on ChatGPT 5 is, it used to be that you could actually pick your model, so you could have a Coming up, a read on the consumer. Steve Leisman has got some new numbers on spending from the CNBC NRF Retail Monitor. You're going to want to hear this to understand where pricing is going and maybe where the Fed may go next. That's right after this.
Now,
Well, later this week, the government is going to release retail sales data. First, though, we have the CNBC NRF Retail Monitor for you. Ready to go this morning. Senior economics reporter Steve Leisman joins us now with the numbers. Hey, Steve.
Morning, Joe. The CNBC NRF Retail Monitor jumped to its best monthly gain since we began assembling the data in 2022. That's a likely sign of some combination of a resilient consumer, big midsummer promotions from retailers, and possibly tariff-fueled inflation. The NRF Monitor, it's fueled by real credit card spending data from Affinity Solutions. It jumped 1.5% in July from a negative 0.3% in June. The measure is ex-autos and gas. Total retail sales year over year up a strong 5.9% from 3.2. Core retail, which also removes restaurants, rose 1.6 on the month from that negative 0.3. Year over year was also 5.9%. July included Amazon's Prime Day, Walmart deals, Target Circle Week, and other chain midsummer promotions. The National Retail Federation pointed to those kind of promotions as potentially propelling sales, but said there was more. Quote, they said in their release or their commentary, we may be seeing growing inflationary impacts from tariffs since recent data show price increases in commodity goods, particularly non-durables. The monthly chart has turned choppy. You can see there could be a sign of the front running we saw before the tariffs, then a retrenchment after, and now maybe a rebound and some inflation. So it could be a combination of all of that in there. By sector, gas stations up a strong 2.7, but so were sporting goods and hobby stores up 2.4. General merchandise had a good month, 2%. Clothing accessories still strong, 1.7. Restaurants and bars, though, that not a sector that should have much tariff inflation. That was also up a strong 1%. Less likely to have tariffs inside of those numbers. Moving on, what you can see here is the NRF added that wages are growing faster than inflation, so consumers have the ability to keep spending. The census for Friday, for the census data, 0.5% gain with 0.3% ex-autos, Joe.
Is this any of that surprising to you, given maybe we're seeing some weakness in the labor market? We keep hearing anecdotally maybe consumers are a little bit strapped. And then we hear, I don't know, we keep hearing how young people have no money to spend. They're barely making it paycheck to paycheck. It's weird, but the consumer seems okay.
I mean, if you look across the board, what I was interested in, Joe, was some of the discretionary items. Then I looked up the inflation stuff in there. Household furnishings looks like there's some inflation there. Appliances as well. Sporting goods were negative, though, year over year. Toys up 0.8%. So there is some tariff inflation bleeding through, but there are also some gains from the consumer on the discretionary side. So people are employed. As the NRF said, wages are going up faster than inflation. So there is some spending power there.
Right.
It's a very mixed picture, and it's very choppy. And we'll see how much the Fed takes from all of this data this week. You have the inflation data coming, the retail sales data coming. So we'll get a better picture of at least what the data say now about the economy by the end of this week.
If you add additional potential replacements for Jay Powell, does that mean you're dissatisfied with the list that you had? Steve, is that how you would read that?
I'm not sure, Joe. You would know better than I would how the president operates. I'm wondering if it's a distraction or some kind of way of just saying, I don't know. I mean, maybe he doesn't like that. He's not happy with the two Kevins. There's this other gentleman there who was a former Bush economic advisor, and we all must be very excited. He's thinking about Jim Bullard.
I know,
but
he's
the
smart.
question is, does Bullard represent the kind of wholesale change that maybe the president wants to affect over at the Federal Reserve?
Someone says American Idol actually did add contestants one season, midway, but it was after the season after COVID. But I don't usually, like The Apprentice, if you're off, you're off. If you're fired, you're fired.
Is that what this is, Joe? A reality game show that we're somehow involved
No, we were
in?
trying to figure that out. Normally, you don't add if you've already gotten rid of some people and you've narrowed it down. You don't suddenly add.
That's
two or
what
three.
he said. I will make one quick point, though. The market on the probability scale is not buying Bowman's third cut this year. If you look at it, it's only 42% for that third cut and 60 plus in January. So they're not really buying that third cut right now. It's hot for September, cooler for October, and then cooler again for a third cut in December.
All right, Leisman. See you later. Thanks. Coming up, new data on the return to the office and the impact on commercial real estate. That story's next.
I need insurance.
Welcome back to Squawk Box this morning. The push to get more workers back to the office, and apparently, finally, it may be working. This could have some big implications for the beleaguered office market. Diana Olick joins us now with more. How many years are we since the pandemic now, getting back to the office?
I think we're on 5. We're definitely on 5. But look, in just the past year, U.S. companies made more progress in getting employees back to the office than at any time since the pandemic began in 2020. This is according to a new report from CBRE. Nearly 3/4 of the 184 companies surveyed said they have met their attendance goals, up from 61% last year. Now, the share of companies monitoring attendance jumped to 69% this year from 45% last year, and those enforcing attendance policies rose to 37% from just 17%. Companies in the survey said they want employees in the office an average of 3.2 days a week. Actual attendance, though, is still slightly below that. Now, more companies said they expect to expand their office footprints rather than contract. That's according to the survey. Obviously, there has been a big slowdown in office development, as well as a surge in conversions to residential. 67% of companies said they will either keep their office footprints the same or expand within the next 3 years. That's up from 64% a year ago. Now, for expansion, most pointed to business or headcount growth. About a third said they will reduce their space, but that's down from 36% last year and 53% in 2023. Overall, office vacancies are just 18.9%, just under the 30-year high of 19%, so still very high. The wild card, of course, in all of these numbers, as with everything else, is tariffs. Now, this and other big plays were in our latest Property Play newsletter. The next one is out tomorrow. If you haven't signed up yet, there's still time. It's free, cnbc.com/Property Play, or use that handy dandy QR code. Andrew, I hope you've signed up. Big stories tomorrow.
I just like that it's handy dandy.
It is.
Diana, thank you. We appreciate it. We'll talk to you soon. You handy dandy over there, Joe?
Handy dandy. I'm feeling it. Yeah.
Jazz hands. Coming up, gold prices falling this morning. No jazz hands for gold.
Tim Waltz.
After a run-up to record highs. Details after the break, but you could have diamond hands, too, these days. That's what we should say, jazz hands. Diamond hands. Later, former federal vice chair Roger Ferguson, he's going to join us. We're going to talk about some of the new names under consideration to be the next Fed chair with him. He knows what it's like to be in the room. Squawk Box, come right back.
NBC Plus.
It's about a minute before 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. And among our top stories this morning, Intel CEO Lip-Bu Tan is reportedly going to visit the White House today. The Wall Street Journal says that Tan is expected to have a wide-ranging talk with the president, explaining his personal and professional background. Fed Governor Michelle Bowman says she's more confident now in her forecast that the central bank should cut interest rates 3 times before the end of the year. Bowman suggests recent weak job data underscores why she thinks the Fed should do that, and her concerns about fragility in the labor market, and less worried about the inflation generated by the tariffs than she had been. And the Trump administration is interviewing candidates to head the Bureau of Labor Statistics after the president fired the previous head earlier this month. Again, here the Wall Street Journal reports one of the candidates being interviewed is E.J. Antony. No kidding, he's on a lot with us. The chief economist at the Heritage Foundation, just on a couple of weeks ago on one of our panels on the Friday. But, Andrew, this is...
I want to get straight to Mike Santoli. He's down at the New York Stock Exchange. There's so much going on this morning, Mike. What's on your radar?
There is plenty going on. The market is kind of taking it all in with this just a gentle lift. You know, we closed the S&P 500 last week, Andrew, just about at the old closing high. It spent all of last week within the range of the prior week. So sort of resettling here, at least at the index level. You see how we've kind of flattened out over the last couple of weeks, digesting that big move higher. Obviously, not unusual to go sideways for a while after a good run. We'll see what comes next, because there has been some pullbacks in the majority of stocks under the surface. In fact, look at how the index has managed to get there. NASDAQ 100 really reflecting most of the Mag 7 AI-related trade relative to the equal-weighted version of the S&P 500. Now, this is a 1 year. The good news, the equal-weighted has up 10% in last year. Not too bad. Actually, also 10% annualized or thereabouts for the last 3 years for the equal-weight, but not even keeping pace with the NASDAQ 100. And that split, again, is getting a little bit wide. You also saw something similar back here in the early part of the year up until that February peak. And so it is getting a little bit skewed in that direction. Again, a lot more talk about the concentrated index. Now, on the flip side of that, what kinds of stocks do people not seem to have much interest in? Traditional defensive. This is a 5-year look. So you got the S&P 500 up 92%. That's healthcare, that's consumer staples, essentially sideways for years now. And, you know, as a percentage of the overall market, they're actually pretty much at record lows. So, you know, you probably need a recession scare and lower interest rates and some kind of change in the cycle for tech to have these groups move up. But it does show you that the market is sort of leaning pretty heavily in one direction, guys.
Okay, Mike, thank you for that. Meantime, talking about leaning heavily one way or the other, gold prices falling from a record high. This after the White House announced plans to issue an executive order addressing what they're describing as misinformation about potential tariffs on gold bars. And joining us right now to discuss all of this is Urs Der, principal at Zeus Industrial. Good morning to you. Help us understand what this either misinformation is or is not.
Well, all I know is what we've been reading, so let's see what the EO says. But if it is a 39% tariff on gold, that would have been over the last, year, $24 billion worth of tariffs from Swiss gold alone. And that changes the price dynamic of gold. There's 3 legs of gold trading in the world, Switzerland, London, and New York. If you make gold more scarce, it's finite. It's going to push the price higher, right? So it causes disruption, and uncertainty has pushed gold higher in the first place. So there you have it.
What do you make, by the way, of the fact that gold has risen and yet the equity market has remained relatively high? Sometimes these things go in the opposite directions.
Right. So it's interesting. I was on in March, and I was saying there might be better trades than gold, and it was at a record high, and it went up by yet another $300-400. The markets also rebounded after Liberation Day very well. And so people seem happy, investors seem happy there. But we have the dollars weakening. We have an expectation of interest rates coming down. There's still a tremendous amount of geopolitical uncertainty, as you can see from events around the world that are intense at this moment. We have a summit coming up next Friday with Putin and Trump. This kind of uncertainty keeps gold up there, as well as the dollar's been weakening despite interest rates staying the same. So as the dollar weakens, gold gets more valuable. So there's various fundamentals that are pushing this. A lot of uncertainty helps it.
Do you want to relate this to what's going on in crypto?
I don't know enough about crypto to be overly critical of it. All I know is that it's new and that it is.
You don't have to be critical of it. You could be bullish on it. I'm just trying to understand one of the things that we are seeing.
Yeah. No, I fundamentally, I think I understand it. I like it. I think it's here to stay. But I sound a little critical in that gold has a 75-year CAGR of 9%, and crypto's brand new and all over the place. So, if I'm going to be an investor and I just want a nice return and something that's safe and finite, I'm going to go to gold. If I want to gamble, I'm going to go to crypto.
How many troy ounces was that, the base of that glass thing that Tim Cook gave Donald, the president, do you think, or
24 carats, right?
I don't know, so I wouldn't know, but that's quite a nice gift. Yeah, I wouldn't think that Trump is creating policies to generate his own wealth in his gold holdings. I hold gold in my own PA, but I wouldn't know how much that weighs.
I mean, $1 million of gold is not. How many? What do you buy now? You can't buy Krugerrands anymore, can you? They're long gone. Or what do you buy? Like a Canadian maple something or other, or American Eagle?
I mean, there's a lot of coins out there that you can buy physically. There's gold bars that you can buy. The kilo bar in Switzerland has been preferred.
I mean, $1 million worth of gold is like you could put that in a little safe.
Yes.
Carry it around.
So there are a lot of people who do that, believe it or not, in Fairfield County and Westchester County.
Yeah.
We got to go. How long is the lift line? And I just want to know about the snow quality behind you there.
Oh, well, that's just a favorite hotel of mine. I'm Swiss by background as well, so I'm sort of watching this Swiss tariff situation pretty closely. But yeah, no, it just keeps me cool in the summer. It's just
I just thought maybe you get a little slushy given all the sun you got on that all the sun on the snow.
That's a shot. That's a shot I took last February, and it was stunning, and it's a great place to go skiing. But right now, it's hiking.
It's very pretty. We can dream. We can dream in the summer. Urs, thank you for joining us this morning. Appreciate it.
Gold will move a little higher.
All right.
Take care.
You too. Coming up, the Wall Street Journal reporting that President Trump's team is expanding its search for the next Fed chair. Talk about that next. That gentleman right there might be on the list, James Bullard, actually. And later, what to expect from the president's meeting with Russian President Vladimir Putin. And will Ukraine's President Zelensky be invited? And what the talk could mean for a possible ceasefire. Squawk Box coming right back. The number of contenders for the top job at the Fed appears to be growing. Wall Street Journal reporting that President Trump's team is looking at 2 additional new candidates, former St. Louis Fed President James Bullard and Mark Summerlin, former economic advisor to President George W. Bush. Joining us with his insights is Roger Ferguson, former Fed vice chairman, as well as a CNBC contributor. Do you have anything other than just personal feelings about these new candidates, Roger? Do you have any knowledge about what's actually going on, or you're conjecturing just like we are?
You know what? I'm conjecturing just like you are. What I've heard is that the president often expands the lists as he goes through these very important personnel decisions. You know, the names that he's added, I would say, are credible. The one I know better is James Bullard. Obviously, you know, his resume speaks for itself. Mark Summerlin, the same. And so I'd say right now there are, you know, serious contenders, but I can't interpret this any better than you can. It may also be a bit of a tactic to keep the 2 front runners, the 2 Kevins, you know, on their toes a little bit and not let anyone get too complacent. The president is very good at doing that as well. So I'm sort of with you. Let's wait and see who actually comes out of this process as the number 1 candidate.
We know James Bullard, well, he's been on many times and in studio and on for a long time, not just quick interviews. And I don't know if he's a dove or a hawk after all that. Do you?
I do not. I think what's very interesting is there are 4 people who have been in the room. Kevin Hassett was a staffer. The other Kevin obviously was a member of the board. Chris Waller is currently there. James Bullard as well. So what I find interesting is, with all the talk of change, 4 of the 5 candidates at least understand something about how the FOMC works, and I think it's hard in each case to discern exactly how they're going to perform. The other thing to recognize is, based on some interpretations from the Supreme Court recently, the president's ability to fire any member of the board is limited. There has to be cause, a little different from people who are actually part of the executive branch. And so I think each one of these individuals will approach the job differently, but 4 of them have been in the room before and know a little bit about the culture and the institution. So we'll have to wait and see what happens.
Michelle Bowman today, Roger, said that given the recent weakness in the labor market, or what looks like weakness, along with her notion that maybe that's not a persistent inflation that we get from the tariffs, has her thinking there should be 3 rate cuts before the end of this year.
I respect that that's her view. I don't think that's likely to be the prevailing view for a number of reasons. One is, inflation is not necessarily completely behind us yet. The last readings were actually a little hotter, moving away from the 2% target. Many people think that there's some inflation, maybe quite a bit left in the pipeline. When I do surveys of CEOs, they are trying to figure out how to offset these price increases with productivity. But the most recent survey, 2/3 of them, 64%, said they would, if need be, pass prices on. Only 20% said they'd reduce their profit margins. And then there's still some debate about exactly where the consumers are. We are at an unemployment rate that looks like it's roughly full employment. And the most recent data suggests that consumers are actually hanging in there. So maybe the odds of stagflation have gone up, but I think all of this is really uncertain, and I think Governor Bowman's probably way ahead of her colleagues in thinking that 3 cuts definitely are baked in for this year. I'm not sure. We'll just wait and see.
No way I'm picking you. After, months and months and years of hawkish. You're out. But there's no way you'd want to go back anyway. You're a CNBC contributor. Life is good. Who needs it? You'd have to be crazy.
Life is good, and I'm not on, exactly. And as far as I can tell, I'm not on even the longest list.
No.
They'd have to expand the list by several
more. That'd be an
to put me
infinity
on that
list. That'd be And me and Andrew would be on there probably, or Andrew and I.
But Joe, I don't understand why don't you buy with me that the Fed needs to really focus on inflation? They came close to losing inflation credibility.
Because I think that's fighting. I think they're still butthurt from what happened on the way raising rates. They've already left the barn. You know what I mean? That they're fighting yesterday's battle for inflation, and everybody loves Volcker. But tariffs, I worry more about the uncertainty that it instills to slow down the economy than I do for that second derivative of inflation. You get some, and a lot of it's being absorbed.
Well, can I ask Roger about that, the absorb issue?
Yeah.
Which is it's being absorbed by this sort of remarkable AI marketplace now.
I think, okay, Roger, it's on wholesale prices, right? It's not on the end price for people.
It will eventually come through. I think the issue is the degree to which productivity improvements, including AI, can offset what is clearly a price shock. I mean, there's no way to deny that increasing tariffs or putting 15% tariffs on when tariffs have been on average roughly 2% is a dramatic change in the price level.
But then explain to me,
and we have to reflect that.
Right. Explain this though. We talk to CEOs every day on this broadcast, and we talk to investors, and for whatever reason, they're more sanguine about the tariffs now that they're on as of just last week, the 7th, than they were before that. Why is that?
Well, look, I think before that there was massive uncertainty. There are numbers being thrown around, and certainly anyone who's making business decisions likes certainty. You may not like the exact number, but
this is the permanence. We're into a new permanent state, is what you're saying.
We're into a new permanent state. So now we're moving to the second question, which is, what do I do with this? My observation with the CEOs I talk to and survey is they're really working hard to figure out, how can they offset this with productivity improvements, stronger teams, a variety of approaches. Having said that, at the end of the day, 2/3 of them say we are going to pass this on to consumers if we can't do anything else. And I think that question mark is still very much there. Therefore, I think it's too early to have a strong point of view because everyone I'm talking to is still trying to figure it out. They just got the number last week. The other thing that's really important is the market, I think, will punish companies for reduced profit margins from these price increases. They will reward companies that hold on to their profit margins. So I think there are lots of incentives for CEOs to try to pass this on. Final point, that Joe made, which is we're just coming through a period where inflation scare is there. People are really worried about inflation.
Right.
So I'm not at all complacent yet, even though there's still uncertainty and to come.
Do you think eventually that the president picks someone that he thinks is likely to be predisposed to lowering rates all the time, or do you think he picks the person that's the best at trying to satisfy both mandates? That's a concern, I think.
I think that is a concern. Now the flip side of this is once you're in the office, the law takes over. There is a dual mandate. People will be held accountable for how well they do, not just by the president who's only in office for another 2.5 years, but society and history. And I think what we're going to find, I hope what we'll find, is whoever comes in respects the dual mandate and looks closely at the data to manage both sides of that story, because that's what the public expects, and that's what has made the U.S. great and strong.
You know what I would do? I would withdraw your name. Just say, if you're thinking about me, don't even bother, because I'm not interested. You should just do that.
You know what? I've got a rule. I'm not going to go on international TV and reject a job that I haven't been offered just yet. I'll let you know if the moment comes what I decide should the president.
That's the way to do it.
I'm not going to take it. I'm not you.
Not taking that job.
Too hard. Too much criticism. I don't need it.
Oh,
Thanks.
You know what? If you take the job, you have to have broad shoulders and do what's right.
Roger knows this is more fun, though. He does know that.
Yeah, much better. Much better.
Thanks, Roger.
There's nothing like crossing swords with the two of you guys early in the morning.
Right.
Thank you.
Coming up next, NVIDIA and AMD in focus after reports that the chipmaker has agreed to give the U.S. government 15% of the revenue generated from exporting AI chips to China. And then later, Council on Foreign Relations President Michael Froman is going to join us. Top trade, President's push for peace between Russia and Ukraine, and so much more. Don't go anywhere. Welcome back to Squawk Box. The chip trade in focus once again this morning on reports that NVIDIA and AMD plan to give the U.S. government a 15% share of the revenue from certain chips sold in China in exchange for access to that critical market. Now, this news follows separate pushback from NVIDIA over ongoing claims in China that its H20 AI chips pose a national security risk for Beijing. Eunice Yoon joins us now from Beijing this morning with the latest. What are you hearing?
Well, Andrew, Beijing has been messaging that the H20, which is a chip that China has had wanted, is potentially bad for the country. In a series of posts, the state media, social media account linked to state TV has been arguing that China should not buy this chip. Yuyan Tantian called the H20 far from safe for China. It says that NVIDIA needs to substantiate its claims that it has no so-called backdoors. It alleges that installing backdoors is a condition by the U.S. government to easing its export curbs and allowing NVIDIA to sell to China. Now, the export of the H20 to China has been restricted on national security grounds, and only recently the Trump administration had reversed that stance. Reports now, though, emerge that as part of that reversal, NVIDIA and AMD have agreed to pay the U.S. a 15% cut of revenues for China AI chip sales. Now, that allegedly involves NVIDIA's H20 as well as AMD's MI308 chip. In addition, the FT has been reporting that China has been pressing for the relaxation of export controls around another advanced high bandwidth memory chip as part of the discussions for the tariff pause extension. NVIDIA issued a couple of statements, one saying that NVIDIA does not have backdoors in our chips that would give anyone a remote way to access or control them. On the 15% cut, it didn't deny it, instead saying, we follow rules the U.S. government sets for our participation in worldwide markets. Guys?
You think people on the ground say that? I mean, one of the questions here this morning in New York, in the U.S., is, is President Trump being effectively bribing them? Is this some kind of extortion thing? We have obviously big questions about industrial policy. These are things that obviously don't exist in China because there is industrial policy. But what is the impression there on the ground?
What is the discussion around it? Is that what you said? Sorry,
my audio just cut out. What I was suggesting is here in the U.S., the question this morning is, is Trump effectively extorting NVIDIA and AMD to sell these products into China, and in fact that they are a national security threat, and somehow because the U.S. government is getting paid off for this. I mean, this is the worst version of the sort of analysis. When I say worst version of the analysis, the most, what would you describe it as? Just the most critical version of the analysis.
The most Sorkin-like.
Oh, not the most Sorkin-like. My question to you, Eunice, is what is the analysis on the ground there of this?
She's laughing.
Well, the analysis here is this a national security risk or is it not? Right. So people here have been hearing over and over that the reason why the H20 and other chips have not been sold to China is because of national security risks. Now it looks as though national security might not really be such a big problem because they're able to purchase or at least sell some of these chips for a cost. So that's kind of the big discussion here. There's also been quite a bit of speculation as to how this kind of plays into the Chinese ability to really push ahead and negotiate harder with the U.S. because it seems as though it's playing some hardball. If these reports are true, then it could mean that China is looking to squeeze off and potentially cut off a revenue stream of H20 chips that would be going to the Trump administration in exchange for possibly getting higher advanced HBM chips, which are important and have been banned under the Biden administration, but are important because they could help companies like Huawei develop their own AI chips.
Well, what does a Huawei think of all this? Meaning, do they lobby the Chinese government and say, please, please, please don't let these chips in because that creates a bigger opportunity for us, or do they have a different view?
Well, Huawei isn't talking about it. The company is not talking about it, but of course, there's been a lot of discussion about what this would mean for Huawei. The Chinese are kind of the messaging over the past several weeks has been kind of questioning the H20, saying, "Oh, is this really a chip that you can trust?" And part of the messaging could be to raise questions about NVIDIA for local companies, so that local companies like Huawei, like SMIC, really start to develop their own chips, or that some of the customers of the H20, such as Alibaba or like the big AI companies, that they decide that, wow, we really should be sourcing from Huawei and really supporting our own industry. This is something that's been ongoing, this discussion of having their own chip industry for many, many years.
Okay. Eunice, want to thank you. Appreciate it.
Up next, we're going to talk technicals and find out why the second half of the first year of a new presidential cycle can be challenging. As we head to break, take a look at some of the names in the cannabis space, all up on reports that President Trump is exploring changing the status of marijuana and reclassifying it as a less dangerous drug. The move would ease restrictions and permit additional medical research and possible tax break for cannabis companies. Squawk Box will be right back.
Calm.
Well, how do seasonal factors technically play into what's likely for the stock market? Could a summer rally mean risks in the fall? We think of that. I mean, how many times has October been a bad month? Let's get a technical view and some key levels to watch for the markets. Join us now, Stephen Suttmeyer, president and founder of Suttmeyer Technical Strategies. July is usually good, August maybe not so much, but a lot of times it's thin trading, a lot of people on vacation, but we all remember sell-offs leading into the fall. Past performance doesn't guarantee anything, but what can we learn from history?
Sure. History tells us that we typically get a summer rally in the market. So when you look at May through July, and you think about where we are in the presidential cycle, the first year of the cycle, that period of time, May through July, is up about 80%, on average about 5.5%. This year it was up 13.8%. I mean, that's pretty significant. So in the first year of the presidential cycle, seasonality turns fairly negative from July through, from August through October. And it dovetails also with the normal seasonal pattern as well. So it would not surprise us one bit to see some backing and filling in the market due to weaker seasonality. I think this year it may be more of an August event. We've run a lot of different numbers out there, and the market could hang around a bit in August. It'll hang around a bit in September, but looking at the data I've studied, it seems like we could have that traditional scary October drawdown this year.
Scary.
Support at 6,100 to 6,200, and then resistance up at like 6,600. So, like, are we in a trading range at this point?
No, I think we're still in this cyclical uptrend that began from April. And I think we can rally into the 6465 to 6600 area into year end. If we dip a little bit here, it could be 6100 to 6,000, but maybe you test rising 26 and 40-week moving averages, roughly around 3,900. That would be perfectly normal within this sort of environment. So essentially what we're looking for really is
what did you say about 3,900?
It's where you have 26-week moving average, so a half-year moving average, and the 40-week moving average, which is like the 200-day moving average. After you get a breakout like this in an uptrend, you
3,900 on what? The S&P?
I'm sorry, I meant to say 5,900. Excuse me. 5,900 on the S&P.
Listen to what you're saying.
Thank you. I appreciate that because you corrected me there.
You're looking for 3,900.
No, 3,900 means run for the hills. So it's 5,900. My apologies.
Okay.
But no, it's so let's just summarize here. It's like basically 6,100 to 5,900 is where the big level is. And I think it's just seasonal weakness, and we can get that bounce in the year end.
What do you look at the 10-year? Do you look at the yield curve? Do you have any feelings about what's happening there and whether it matters?
Well, I mean, the 10-year is just a range-bound mess of a chart. I would argue that the more discernible pattern would be in the 30-year.
Okay.
The rebound that the yield in the 30-year had towards 5% could very well be forming a rising wedge, which is typically a pattern that would suggest a downside break, meaning that the 30-year yield could go lower, perhaps into the 4.4%, maybe even down towards 4%. The other part of the curve that looks interesting is the 5-year yield, which could be forming a distribution top, meaning that if you break lower from that pattern, you could get lower 5-year yield. So, my thought is perhaps you could see continued steepening in the curve here. And
so you think we could get some cuts, like 2 or 3 cuts in this year?
I mean, not that that's my expertise, but it seems to be that
that's
when you look at the
that's how you would
charts,
see
it's setting up that way.
if 5 and 30 are falling and it's steepening, then the short rates would have to be going.
Correct.
lower.
Exactly right. And that's what the charts are suggesting.
Okay.
That there should be some cuts.
You like the big, mags, the 7 stocks. You like the S&P. You like the Russell. Is it value? Is it growth? What would you be focused on? What does technicals say?
So right here, right now, we're in a long-term secular bull market that tends to reward the biggest companies out there. So the largest stocks are going to outperform the average stock. That's been the case.
Right.
Growth is really strong versus value across market caps in the U.S. You had new relative highs for the Russell 1000 growth versus the Russell 1000 value. You had the S&P growth going to a new high versus S&P value. You have small cap growth strong versus small cap value. The interesting factor here is in one part of the world you actually have value breaking out versus growth, and that's internationally. EFA growth, EFA value is breaking out from a bottom versus EFA growth. A little bit different there. But here, large cap driven market, growth driven market, I think that should continue, and that's where we stand. I think that's very important to highlight here. So,
How's your dad?
He's doing fine. Yeah, he's in our new business, Supmeyer Technical Strategies. He's the consultant emeritus, so he's behind the scenes, provide a little bit of guidance here and there.
Does he make more money than you, or are you the guy now? Who's?
Yeah, no. I mean, he's retired.
You don't have to.
He's retired,
I got
right?
it. He's retired. That wasn't a serious question.
No, it's a great question though.
He's still young, isn't he?
81 years old.
That's what I mean.
Exactly. Yeah. Young at heart.
Yeah. You'll see.
Yeah.
You'll see.
I'll see. I'm waiting.
You'll see.
It's gonna happen to all of us.
When you start saying 81 is young, it means you're getting close.
Well, as long as you're active, walking around, that's a possibility.
Stephen, thank you.
Yeah, thank you very much.
Appreciate it. Coming up on the other side of this, investors looking ahead to talks between President Trump and Russia's president, Vladimir Putin, in Alaska. As the two leaders try to negotiate an end to the war in Ukraine, we've got Council on Foreign Relations President Michael Froman. We're going to talk about that topic with him. NVIDIA, AMD with China, tariffs, and so much more. Don't go anywhere. Squawk Box returns after this.
Us.
President Trump and Russian President Putin planning to meet for peace talks in Alaska this Friday to try to attempt to end the more than 3-year conflict with Russia and Ukraine. Joining us right now to talk about that and so many other issues that we need to get to. Council on Foreign Relations President Michael Froman is here. He's, of course, the former U.S. Trade Representative in the Obama administration. Good morning to you, Michael. Help us understand from your perspective whether you think a deal could actually be in the offing here and what that would even look like.
Well, I think the critical issue will be whether the president can secure a ceasefire, an unconditional ceasefire. The president wants to see the fighting end. The Ukrainians want to see the fighting end. Putin has insisted that the ceasefire come along with significant territorial concessions by Ukraine, and the Ukrainians, quite understandably, aren't prepared to do that. And so, is he serious? Is Putin serious about ending the war or not? And if the president is able to come back from Alaska with a ceasefire, that will be a significant achievement. If they start getting into trading territory at Ukraine's expense, then it's not going to be a very good or sustainable agreement.
Okay, but I want to throw in a couple of chess pieces here. So we have one chess piece which really entered the discussion, entered the chat, as the kids say, last week with India, for example. So Trump is going after India for buying fuel and oil from Russia. I would imagine if I was Putin, that would be part of my conversation on Friday, for example. I might even be talking about some of the relationship issues with China as part of all of this, no?
Well, absolutely. It was very interesting that he imposed a 25% tariff on India for buying Russian oil. Who is the other country that is buying a lot of Russian oil? It's China, and there's no discussion right now of putting a tariff on China there. That would squeeze Russia quite hard. The president has talked about sanctions and another round of sanctions, secondary sanctions as well, putting tariffs on other countries. If he went forward with that, I think it would put significant pressure on Putin. But it's sort of been a one step forward, 2 steps back in that regard. There are a lot of issues to talk about between the United States and Russia. But critical right now is bringing an end to the fighting in Ukraine, and that involves really focusing on the ceasefire. Ultimately, there'll have to be discussion of territory, there'll have to be discussion of security guarantees, of whether the U.S. and Europe will continue to provide Ukraine with material support so that they can defend themselves. But right now, the issue is really the ceasefire or not.
Ambassador, I get that, but I just want to know in practice, because you've been in the room for these kind of discussions before. Putin walks in the room. Trump says, I want to have a ceasefire on Ukraine. Putin says, okay, but by the way, I have a laundry list of other things you need to do for me first. Is that not how this happens?
I think the question comes down to that word first. I think if Putin comes in and says, all right, I'm willing to accept a ceasefire, but you got to relieve the pressure on my oil sales. Well, that's a deal that could be talked about, right? That's the president using leverage to get Putin to come to the table to do something he was not willing to do before, which is accept an unconditional ceasefire, and that would put an end to the fighting.
Okay, let's move to a related but different topic, if you will, which is NVIDIA, AMD. This morning, the report suggesting, more than suggesting, that effectively President Trump is putting a 15%, what might be described as an export tax. Others are describing it as extortion or bribery. I don't know what to make of this. I don't think we've seen examples like this, but maybe you have, of situations where particular companies are effectively paying the U.S. government for the privilege of exporting to certain countries, where at least prior to this, we have discussed the possibility of it being a national security threat.
I have not seen anything quite like this in the United States. Of course, the place where you sort of tend to see this kind of government intervention in the market is China. And we're sort of following China's playbook now of the government getting very much involved in the affairs of individual countries. As you said, Andrew, the real issue here is that export controls used to be this area of of policy where you looked at the technology and made very hard judgments about it, whether it was critical to military, intelligence, national security, that we not allow things to be exported. It wasn't an issue of trade. It wasn't something you traded away, and you revised them depending on the development of technology. With the recent decision by the Trump administration to allow the sale of chips that had previously been restricted under export controls, it makes a security issue more of a trade issue, and that's a bad precedent. The Chinese have always wanted to engage in a conversation with the United States about export controls as if it was a trade issue, and we've now opened the door to that.
You've just written a piece in Foreign Affairs, sort of a much broader sort of take on what's happening to trade and geopolitics as a result. Give us the top line summary, and I do recommend that folks go out and read this.
Well, the top line summary is that while there's a lot of focus, understandably, day to day on what the tariff level is, if you take a step back, basically the global rules-based multilateral system is dead. It's over, and we're not going back to it. The U.S. is following its own set of rules. China is following its own set of rules. When you've got the two largest economies in the world doing their own thing, then you can't really have a common set of rules for the whole world. It's not in our interest, it's not in the U.S. interest that there be total anarchy, that other countries follow our example and set their own rules. That's what trade looked like prior to the Second World War, when countries used trade as a weapon with each other. And so the challenge will be going forward, can there be a new set of rules that countries come together around, a group of like-minded countries around one set of issues, another group around another set of issues, so that there's at least some stability in the system. And that's going to require U.S. leadership in many respects. For some countries, it may be involve opening their markets and having free trade agreements. That's probably not going to happen here in the United States for a while. For other countries, it may be agreement on how we restrict technology or how we deal with non-market economies. Whatever it is, we don't want a system that's completely absent of rules.
And your sense of this being a permanent, sort of a new permanence, if you will. I mean, we keep talking, and I keep getting asked the questions, I keep asking the question, why you think that both the market and I would even argue business executives and CEOs, they may not be happy about the new tariffs, but they seem to have settled in. And this idea that they're sort of more sanguine about it than they were before. The markets have not, freaked out the way they did back in April, for example.
I think that's right. I mean, it's remarkable how people have adjusted to the idea that we're going to have somewhere between 10 and 50% tariffs on other countries. Right now, we have about an 18% effective tariff rate on imports coming into the United States. That's going to get eaten by somebody, by consumers who buy the ultimate product, by intermediaries, manufacturers who import inputs into their manufacturing process, or by the companies, and it will show up in reduced profits. But that cost has to be absorbed somewhere in the economy. And I think you're right. Markets have been pretty complacent about it. Had you asked them several years ago whether they'd be, when tariffs were an average applied rate of 2.5%, how they would feel about 18%, they would have freaked out. And they're not freaking out.
Ambassador, is that just misguided mistake? That's just August optimism? And that somehow we get to the fall and the prices go up and they say, oh my goodness, this is now a problem? Or do you think that they're really in it and that the markets are efficient in that the markets have spoken and this is what it is?
I think there'll be some adjustment most likely going forward in that tends to be a lag between when tariffs are imposed and when it shows up in inflation. Right. And there tends to be even a longer lag between when tariffs are imposed and when you see it in reduced growth. And I think at some point we may see those things. But the American economy, as you know, is incredibly resilient. It adjusts well. And we may have less of an impact than some of the strongest naysayers have laid out. But there is most likely to be some impact going forward. We shouldn't be complacent about the situation right now and assume that it's going to last forever.
I mean, a lot going on, Michael. It could be, people keep talking about how powerful that expensing capital equipment was in the big beautiful bill. There's deregulation. I think oil's $64. There's AI. I mean, you put it all together, and tariffs might not be the determining factor for why the stock market continues to trade well.
Yeah, Joe, I think you're right. There are a lot of other factors there, and particularly AI, where we're not really sure exactly what the implications are going to be. It could be very significant over some longer period of time. I think the question will be over the next several quarters whether we see the inflation tick up or not, whether we see growth tick down or not, while these other policies are put in place or these other developments like the dispersion of AI take place.
And things can change on a dime, and same goes for the bond market. We saw that brief tantrum we had, I don't know, 6 months, whatever it was. So, but that's behaved too. That's really well behaved. The bond market with all these troublesome things going on, but they could both, they could both quickly change.
Yeah, no, we've seen that sort of by definition. Markets tend to be complacent until the moment when they're not.
Exactly. Things are going great till they aren't.
Right. Exactly. Ambassador, want to thank you. What a morning. What a morning. You bet. When we come back, we're going to take a look at some pre-market movers, and there are a bunch you need to see. Squawk Box coming right back after this.
Buzz.com.
Welcome back to Squawk Box. I'm Dominic Chu with your morning movers. Let's start with shares of Barrick Gold falling after reporting a slight profit beat in the second quarter earlier this morning. Gold production, though, came in below some estimates. The copper and gold miner barely mentioned tariffs in their report, but copper tariffs have been, of course, a key spotlight for months now. But gold came into the fray last week after reports that import taxes would be levied on gold bullion, bars, and that sort of thing. A White House official did tell CNBC on Friday that the White House would clarify gold tariffs in the near future. Investors might get some more color on what that means when the earnings call starts at 11 Eastern time. Meanwhile, you've got Intel taking higher on a report from the Wall Street Journal that CEO Lip-Bu Tan would be meeting with President Trump later on today. President Trump called for Tan's resignation last Thursday, calling him, quote-unquote, highly conflicted. That came after Senator Tom Cotton released a letter he sent to Intel's board on Wednesday, where he voiced concerns over 10's reported ties to China. Intel up 2.5%. And wrap things up here with a check on crypto prices. Bitcoin hovering just below its all-time high. We're currently at 119,572. 123,000 and change was the record high. That's a boost for crypto stocks this morning. Check out Coinbase and Strategy as well. Both of those rising on Bitcoin prices. It breaks a slide for Coinbase, by the way, which has fallen each of the last 3 weeks. Strategy popped last week, but then fell 3 out of the last 4. So keep an eye, Joe, on Bitcoin. I'll send things back over to you guys.
Great, Dom. Thank you.
You got it.
The Trump administration reportedly preparing an IPO for Fannie Mae and Freddie Mac later this year. The Wall Street Journal says that the government could raise around $30 billion from the offering. Some officials are said to be looking at selling between 5 and 15% of Fannie and Freddie stock. That would value the companies at about $500 billion combined. The two have been under government control since the financial crisis, and Bill Ackman has been invested in the mortgage giants for more than a decade. And in a post on X yesterday, Ackman said that merging the two could help lower mortgage rates and reduce their operating costs.
And then there's this. Officials telling NBC News that President Trump considering deploying up to 1,000 National Guard troops in D.C., that's Washington, to help bring more security to the nation's capital. The president will hold a news conference today on D.C. crime. That's going to happen at 10 a.m. Eastern time, Joe.
Save a couple for Cincinnati. And we're watching shares of Micron, the company raising its current quarter guidance, citing improved pricing for a key product. Micron's previous guidance from June fell short of the high expectations of investors. The company is expected to provide more details at the KeyBank Technology Conference, Park City, Utah. Park City, Utah.
Love it.
Yeah.
Yeah.
No kidding. At around 11 a.m. It just, am I right or am I right?
You are right. Meantime, I want to know what you think of this story. So the New York Times reporting big story out over the weekend in San Francisco about how Mark Zuckerberg and his wife have been operating a school on their property, apparently without permits or permission. It's part of a larger article about the neighbors, and they've really built a compound in the town. The neighbors have noticed this pattern where kids are being dropped off. Zuckerberg announced recently he was closing a school he'd set up for low-income children, so sort of juxtaposed against that. I don't think that should be the issue. I think the question is, and if you're the neighbor, so he's assembled a compound. He's bought about 11 homes all in the same area.
Yes.
During the pandemic, for his kids, it appears he created a bit of a school. I mean, he hired a teacher or two, maybe 3, and then had some of their local friends coming over during the pandemic.
Okay.
All of which seems totally cool to me.
Right.
This apparently has gone on longer, though, now, and apparently there's like drop-off, like 14 or 15 kids every day being dropped off in this neighborhood. The neighbors don't like it, as you might imagine, and there's all sorts of commotion about it. I don't know.
No license.
What do you think?
It's not, well, now, I thought we implied that it was for low-income kids because he shut down.
No.
But this is for like his friends?
This is for him and his friends.
Yeah.
And they don't take, but you have to have a permit to operate a school during the pandemic. They didn't care about this. Now they care about it, apparently.
Oh,
I don't know.
I don't know how I think about so many things today. I'm going to go home and that's all I'm going to think about is today's show. And how
it's a lot. The whole NVIDIA thing, everything.
Right. Make sure you join us tomorrow. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Pre-market steady, just south of all-time intraday highs as we set the table for an important week of inflation and consumption data. 10-year around 427. Our roadmap begins with NVIDIA and AMD, both companies reportedly agreeing to pay the U.S. government 15% of their revenue from sales of those AI chips to China.
Speaking of chips, Intel CEO Lip-Bu Tan reportedly also set to visit the White House today. This after the president called for his resignation last week. And also ahead, we got a big week on the inflation front, led by CPI, as one of the Fed's dissenters pushes for multiple rate cuts over the remainder of this year.
Let's begin with the chips. We've got the NVIDIA and AMD news. We've got this Micron guidance, Jim. But on NVIDIA, a lot of discussion about what this means for government involvement in American business.
Well, I think when you look at how much market cap was gained when NVIDIA went up, and when they got the approval at AMD, and I've got to tell you, I think that the president wants a piece of it. Is that right? I don't know. I do think that they didn't have the they didn't have the $100 billion. I mean, when the president approved them being able to sell the H-20.
Yeah.
So the president wants a piece of it. I don't know. For the country, it's not for the presidential library, for heaven's sake.
This one is not for the presidential library. No.
Right. It's not. Well, I'm saying it's for the country.
Unlike the settlements with Paramount and ABC
It goes to the country.
and the media companies.
They made 161. They had a one-day gain of 161 billion 772.
You're talking about the market cap.
Yeah, well, I mean, if they're the president, you saw that by saying, "Listen, I'll let you sell," they gain this. I think the president says, "You know what? Why shouldn't the country get some of it?"
It is a new way.
Right,
And
it's
I mean,
new.
I'm sure you guys saw the Greg Gibb piece in the Journal, which I thought was, he's writing really interesting things and just talking about we are moving closer to China than China moving closer to us, which of course there'd been a hope maybe 15, 20 years ago, a thought perhaps, but it's state-run capitalism.
Yeah, but that's the PLA. This is not the Defense Department. The PLA runs the Chinese country.
No, but it is interesting that you're taking a piece. I mean, at what point are we going to get to the point where the government is seen as a better allocator of capital than the market?
That's already happening.
That's what the CHIPS Act was, right?
Well, the CHIPS Act was with carrots. These are with sticks.
Right.
And he's telling American business where they should invest, who they should have as a CEO, and where to send the check for a cut of the profits.
A little aggressive, but at the same time, what? The previous government wanted to give the president Biden. They wanted to spend $50 billion, say, on choosing winners and losers. They chose Intel, ill-advised. Who told them not to?
You did.
Thank you. And yet there they go. So now this is a new way. It's kind of risk-free. That was a risky way to invest. This is a risk-free way to profit on the back end.
So do you still believe?
I'm not against it.
Do you still believe that companies know better than government?
Well, I think that this is one where the government, by giving them the right to sell, gave their shareholders a huge amount of money. And I think that Trump, this is not what I would do if I were president. But Trump, I think he says, look, if we're going to make money for them, then the U.S. government should participate. It's a different way. It's not the way. I mean, it's like saying, listen, we're going to give an order.
What's the difference then in taking a percentage of the sales of any other in demand?
We're going to let you sell to Americans, and you're going to give us a piece.
Well, that's like the Lockheed Martin. No, I'm not going to take 15% of Lockheed Martin for selling to NATO because I told them to sell to NATO.
Why not?
Well, no, because this is something where they weren't able to sell.
They were.
They were.
Then they weren't. Then they were.
I'm trying to explain what I think is the president's rationale. What I call right now, right? What I call Jensen and say, hey, listen, Chief, I'm taking 15%. No, that's not my style. I'm trying to explain, not to say it's a great idea. I don't want to do it. I'm trying to explain that the president says, hey, wait a second. We just made the shareholders $150 billion. I want some for the U.S. Treasury. Like I said, he didn't say it for the presidential library.
Right. No, this is not a direct payment to the president.
It's for the country.
Yes, it goes into I don't know where it actually goes. I guess just into general revenue of some kind.
And like everyone else, I'm actually trying to offer an explanation. Everyone else is just throwing their hands up. I'm not throwing my hands up.
People are rightfully so pointing to any number of things that have occurred over the last 6 months and saying this is a very different approach than what we've been accustomed to for most of our history. Now, that doesn't mean that there haven't been times when the U.S. government... Thank you.
You're welcome.
Yes, as I like to say, very keen sense for the obvious.
I just think that we have got to get used to this. The president sees the big game and sees 150 billion just because he said, you know what, I'm going.
Well, you keep talking about the market cap gain of NVIDIA.
Yeah, what are they going to do? Are they going to sell now? Sell shares to pay for the
what do you really? Oh, you gained $3 trillion in market cap since I was this or that. I want 50% of that.
I'm not Reagan.
Why do you bring up the market cap?
Which
That has
Reagan?
nothing to do with
President
this.
Reagan or Reagan?
This has nothing to do with that. This is 15% of whatever they sell in China.
And by the way, 15% of what, 50 billion maybe on a good year?
150 billion.
No, he's talking about the sales.
They made 161. Oh, you mean how much
sale?
they
On these chips.
Yes.
There could be 50 billion in sales.
So 15% of that relative to overall government income.
Tiny.
Tiny. You think it's more symbolic than material?
Okay, does anyone else have an explanation? At least I'm offering one that is somewhat cogent. What do you want? What are you, Mr. Paramount? What are you offering?
I got nothing for you.
You
As
got nothing
usual,
for me?
I got nothing for you.
Oh my God! Okay.
Other than
It's Survivor here.
I mean,
Jeff,
I don't know.
Jeff Probst. He ain't got nothing.
I don't
for
know
me.
what's next,
Okay.
and we'll
All
see.
right,
And
Jeff.
it's
Okay.
fascinating to report on.
Look,
By the way, are the Chinese going to accept these chips? I mean, there were over the weekend,
Now
as
they
you know, there was a story
now they
from
don't like 'em. They didn't
saying
like 'em
that
at the beginning.
from the Chinese, essentially a state-controlled media outlet, saying, "Let me just finish. Let me just finish telling people what
Let me just. What
it
is
was."
this, Joe and Andrew?
They
hey,
said-
don't give me that.
They said that
Hey, did you see who won this
they
week?
questioned whether there was a back door. They questioned the security of the chips and things of that nature, bringing into question whether they really would buy a lot of them to begin with, Jim.
Right. Well, I think that Eunice, you gave us a series of bullets about how the government wish that people didn't use the H20, but this goes back to the notion of what did the Chinese have that can be as good as the H20, and the fact that the president was won over by the reasoning of Jensen that look, if we get them to write on our chips, it's better than have them write on their chips. So the whole thing is a big mess. I admit.
And it's also a big race, to your point, an AI race around the world to be the standard, so to speak.
Right.
As the Chinese have models that are the equal of some of our own companies, or at least very close.
But not
Perhaps
NVIDIA.
not.
Not NVIDIA.
No, not making the chips themselves,
Right.
not designing the chips, I should say.
Right.
But I'm talking about DeepSeek and Alibaba and ByteDance and what they're capable of doing when it comes to the LLMs that they have created as well.
But, you know-
Many of them open source, by the way. So
Very
you are
true.
allowing much of the world to use them in a way that is not really the case with our own. Meta has open source. OpenAI just did one.
Right, but why is this so different when MP Materials made the deal with the Defense Department and MP Materials that doubles, Defense Department's a winner? I think that was the precedent.
15% of that was a unique
was the
deal as well. We
that was the
perhaps didn't spend
precedent.
enough time on that. Very interesting.
But that was the precedent. You got to double, Defense Department wins. You know, look, I'm just saying that the president is a more transactional person than we're used to.
He's
Like,
the
say,
most
like Jefferson or
transactional person
Monroe.
any of us have
Well, the
encountered.
transactional, the Times calls him interventionist when it comes to American business, and the Chinese have been working this model for decades. You think we're going to outdo them on this front?
By the way, are they allocating capital appropriately? It's not clear to me they are in that country.
The People's Republic of China and the PLA worked hand in hand. MP Materials and the Defense Department, that's a very similar transaction. Now, does the president want to emulate the Chinese? I think when it comes to some things, yes. I think the president has never really said, look, I don't think dictators are bad. I've never heard him say that. I think he thinks that a central planned economy has some value.
We're definitely, it at least argues we're headed that way. The golden share with Nippon U.S. Steel, the Lip-Bhutan meeting we believe today.
I think that is a very interventionist meeting. I think that the president's going to sit down with Lip-Bhu, and he's going to hear about a man who was worshipped by Satya Nadella, by Jetson Wang, that was given the Robert Noyce Award in 2022 as the most important person in semiconductors. And I think he's going to be impressed. Now, it is also true that Lip-Bhu has invested in dozens of Chinese companies. That could be a problem. That with his Walden investment fund, he has been very, very effective. But he also saved Cadence and gave you a 45 times, put 1 billion to 45 billion, took that company. So I think that there are some things. I mean, Lip-Bhu has to say those companies I disown. I don't have anything to do with the Chinese if he wants to keep the job, but. The board is split anyway on Lip-Bhu. I think the board quickly went to the Journal and gave him a lot of
that was a story from Friday talking about dissent on the board itself about
Sabotage.
the direction that Mr. Bhutan has taken Intel in. We'll see if we get any news out of that meeting today between the president. You guys want to move on to some of the market moves and Micron in particular? Or?
Sure, because I think Micron shows you that there's underlying strength in DRAMs. We had some real weakness in DRAMs even 4 weeks ago when I felt that Sanjay Mehrotra was trying to keep us from getting too excited. But this, hockey stick up for DRAM
Yeah,
pricing.
I mean, Micron pre-announces before they, take the stage, so to speak, at an investment conference.
At Key?
At Key. And I think this is an 11 a.m. presentation, so we'll get a bit more then. But yeah, the news is they increased their fiscal fourth quarter 25 guide. With revenue now and EPS at 11.1 billion, 11.3. You get the picture. Gross margins,
prior was 10.4 to 11.
Yeah.
And Wells points out that they did not pre-announce last quarter.
No, and I'll tell you, there were a lot of people who were caught. The stock had gone up to 130, and then it just collapsed when they gave a forecast, basically that DRAM would be weaker. Now, where do DRAMs go? It's the base building block of everything. So, I mean, I can say once again, don't get short cell phones. Cell phones have DRAMs. Obviously, PCs have DRAM, loaded with DRAM. You want to be in Dell again? Well, Dell's going to report. I think Dell's going to have a great quarter. Great quarter. Yes, I do.
And why is that?
Because I think that Dell is the one of not super micro, but Dell is your preferred partner. If you want to bring in NVIDIA, you can't just bring in NVIDIA. You have to have a partner because you don't know how to do or set up NVIDIA. Michael Dell is the foremost at doing that. And by the way, he bought back so much stock when it was lower. It was a monster win by Michael. I think Michael is every bit as good as he was when he started.
He's quite an impressive
Isn't he
fellow.
impressive, guy?
Absolutely.
And how about charitable? Can we mention that?
He's quite charitable. No, listen, and he has sort of not unsung by any means, but doesn't quite get the attention perhaps as one of the great entrepreneurs, businessmen in the country.
Really is one of the great.
I mean, Austin, Texas, for example. Look what's happened in that city.
I think that he's responsible for a lot. Well, of course, the greatest
There's no doubt about it. Yeah.
Hospital.
I mean, obviously, it also started with having a university there, which
yes, but a well-capitalized university because of oil.
Interesting. Speaking of Dell, gets a mention in this Melius downgrade of Adobe.
Oh, I thought we did that.
Talking about the days where cloud was hurting hardware. Now he argues that software's hurting it, or software suffering from AI.
Yeah, particularly that SaaS model. He is adamant when he took Adobe, which he has been just banging down. Now he took it to a sell. His thinking is that AI has run over all these companies that were very expensive. And look, I'm going to tell you, because I happen to be, I like Mark Benioff very much at Salesforce, but he's convinced that Salesforce is going to have a huge problem because people can replicate what they do, not stealing it, but just say, listen, we can do that kind of, the kind of software as a service like Monday.com, like HubSpot, last week got that good, like Salesforce, where you can create the software using, like Monday is just getting slaughtered. Monday is a mini service now. A lot of people
feel. MNDY is also it's down.
Yes,
I think
Workday is tough. Now I think that Ben would tell you that ServiceNow is the most protected, not Salesforce.
But AI, the idea being that AI is eating software.
Yes, which is a joke on the old day when software ate the rest.
Correct, and he also references sort of the period when IT hardware in the 2000s, 2010s, when AWS and cloud infrastructure started to crush the multiples of those that made the hardware.
Including Dell, which went to a 5 multiple in 2012.
It's an interesting, and we did see many of these stocks, even late last week, take it hard. By the way, the ChatGPT 5 introduction also sort of introducing perhaps some competitive threats
I would not pay up.
Are you a believer in this overall theme?
Yes, I am.
You do?
Yeah, I am.
So you would not be owning a lot of SaaS-related companies?
I think the problem is that those are the people who are being laid off, the people who get those seats, so to speak, which per seat model. They are the ones that we're discovering may not be needed. That's the OpEx that's coming down. And I believe that OpEx is coming down. I believe there's some reason why you would go AI. What I thought was interesting was that Ben is going for Copilot. That's positive. That people are starting to use Copilot to obviate the need for expensive seat
the view that Azure growth is coming at the expense of AWS. At least that was the thinking last week.
And that's a difficult one because AWS has the ability to turn on the spend of NVIDIA. That's because they're making their own chips, which are cheaper and not as powerful. I mean, I think they would disagree with that logic, but that's what I understand it as. I would say that Adobe is, everyone's after Adobe. I mean, you have Figma, you have Canva, you have companies developing their own. You have, listen, Zuckerberg. You don't need Adobe. You can just send a check to us. We know how to do
We'll do it all for you. By the way, we'll do what the ad firms used to do for you too. We'll do everything. You can do it all on your own. You can do it like that, right?
Do you believe it?
I believe it.
I've seen it.
Have you?
Yeah, I've seen it. It's pretty amazing.
Is this your daughter?
I told my daughter, don't spend a dime on this. It's just, Dad, why would you ever spend a dime when you can just give the money to these guys now? I said, never mind.
Yeah.
Never mind.
Powerful. We'll get more into that downgrade as Amelius.
Look at that.
310. That's 13 times 27. We'll get to C3 AI. There's news on Tesla, AMC, Paramount, cannabis today. We'll get to CoreWeave and Lilly when we come right back.
double bottom, Dolby might be worth a look at or swing. Yeah, I got a double bottom higher low, snake breakout pullback with a double bottom back to the 200, so that's a $10 scalp. Oh yeah. Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Oh, I'm all comfortable. They say if you cross your legs that your blood pressure will go higher. So I'm going to sit here for 5 minutes without my legs crossed to check my blood pressure. Got a double bottom coming in on TTD. Hope everybody had a pleasant weekend, stayed out of trouble and didn't get in trouble. It's not good to drink and drive. If you're too drunk, don't drive. Even if you've been drinking, don't drive. I got lucky. I mean, I've had
got this.
I got a DWI. Years ago. A couple of them. One time we were at a SMSU, and these cheerleaders would have this big festival every year, and they were up there in the sky rise showing off their titties at us. Then all of a sudden the cops came, so we all jumped in our cars and started skedoodling, and I outran them the first time. I should have just went straight home, but I sit there in the middle of a parking lot waiting for them so I could do it again, and the second time I wasn't that successful. So I had like 9 tickets. And I had a good lawyer and a couple grand. At that time I had a souped up Pontiac Tempest. I don't know if you ever saw them cars or not. Pontiac, I don't even know how to, I don't learning how to spell it. Poniac. Let me see if I can find it in here. It's not Brooks. 1972. That's what they look like. It had a real fast engine in it. Looked like a Roadrunner. It might have been, I thought it was a 72, but it might have been, still think it was a 72. I had a Pontiac 69 Le Mans. Yeah. Had a big old engine in that thing. That thing could run. There's the Le Mans I had. And I had to buy my first car before I could learn how to drive. My dad wouldn't let me drive his car. So I bought me a 64 four-door Oldsmobile. It's called it Perry's Olds. It was a nice car. They don't make them like they used to. Parking lot full of hot rods, and now they got, look at the parking lots in schools now. Hand-me-downs from my daddy. All right. Well, I did a couple videos this weekend. I did one on TTD, and they came out and they started bashing it first thing this morning. What I think's going on is they're buying it. Fat cats will be buying it, so I'd like to see someone look at the block trades on it today. I got a low support just under 50 bucks. So if we dip on down there, I'm going to go long. The earnings didn't seem that bad. And they were pumping this stock, I mean, big time on the way up. All of a sudden, they give a 50% discount on it. From 100 to 50, analysts are saying. Downgrades. They probably won't stop. We got it. Maintains the 84 price target. Needham. Jeffries maintains a buy on it. It was 100. Now they've got 50. We got Beard outperformed 80 from 100. So I think we'll get back to 72. We got a hold on it. And it's not really lost any clientele. The earnings were up 19% year to date. Earnings, they made more this quarter than they did last quarter. So I don't know. I do believe that a lot of these, and I heard last week that they were taking some of these stocks that had a great run and secondary, not like the Nvidias and the Metas and the Microsofts and the top 7. There's an ETF I'm going to be watching called MAGS. Now, if I'd have been watching this, I probably would have called this trade out. Snake breakout, pull back, boom to a double top. That's MAGS. So, I got to watch this guy later. Growing up in a different generations. And Scott Baio looks like he's been wore out a little bit from the partying he's done. Yeah. Make sure I got my platforms up. We got the pot stocks running. I always like to call the lows, but you know, now we're sitting up here at the highs again. Watch Lilly. I think Lily's still overpriced. I got 611, and that's still overpriced, but I'd like to take it there. Washboardjim. Brad Pitt, I guess, had his house broken into in June, so he bought him a new house for $12 million. I told him I don't really give a shit. Him and I were rivals back in high school. We opened flat on the Sneaky Snake on SPX. So let's see if we get a pullback. I'm going to clean this up. We got a triple bottom for sure. Triple bottom and a 1, 2, 3. So we'll have first support, then come up second. And then we have a double bottom from Friday's open. So somewhere maybe off the 63. Kind of stagnant right now. Looming inflation report eye to U.S. equity futures trend to water. I just don't understand why they've got this inflation thing going down. Man, we had so much inflation during the Biden years, and they would hardly ever talk about it. It just pisses me off how rigged this market is.
You gonna be okay?
Yeah, I'll be all right.
Got ES 640850. That's my bottom support.
Which one? What's the number again?
640850.
On the 30-minute. Yeah, I see it.
Pre-market low.
Yeah. And we got 6409.65 off the 63. I had 6413.20 from Friday. 6413.20. And the SPX, I got 63.84 for right now, with a 81.21 for bottom line, maybe triple bottom. And good morning to you, Funk.
Good morning.
Yay.
Coming down.
Wow, look at Amazon. Amazon. We got three black crows kind of holding support. SPY, today's the 11th, 637s. We got a double bottom, pre-market low on the SPY at 117 calls. The 637s. Beach trade. There it is, 29. Bingo, I'm out. Just like that. $100. And that was a double bottom, high or low. We actually hit a double bottom. That's still high or low, not by much. $134.5. About ready to get all out here. I'm gonna go turn on my air conditioner. That kind of warmed me up right there. God, Jim, fingers a little rusty this morning. 35 again. Tesla boom. That's a new high today on the 20-day. And we broke one. Let me see if we broke the triple top. We're at a triple top. We just kind of snudged above it a little bit. It's called a pennant flag. Triple bottom, triple top. Google had a 50% pullback from the breakout on Friday, just right under 200 bucks. 198.70 is your third support on the Fibonacci. Joby's got a huge breakout. I was watching Joby. I was going to jump in that thing. And what, I haven't mentioned Oklo here in a while. Let's see what it's up to. SPY's at 140 now. Could have been a nice little trade, but held them all there.
AMNR, well, no, that's something bad.
Mr. had a huge breakout last week and this morning after hours. AVGO. Yeah, these dips on these stocks, man. If you got your favorite stocks, I'd be writing them down on paper, at least 5 of them. Look at them every single morning, first thing. Trying to think. Apple had a huge breakout Friday. You put the Fibonacci's on Apple too from Friday, from the point of breakout, and we pulled back 50% from its high. SPX pulled back and hit the 200 on the 1 minute. /ES hit the 63 that Jimmy mentioned on the 30. We got a doji with a tweezer bottom, kind of off the 50. NDX, that's one I'm going to eye a little bit, add it to my watch list. The NASDAQ 100 index. Double top. New high. SPY's at 146. They've been $600 right there. AMD's hit resistance. Got a double top on NVIDIA. SMCI new high. TSM double top. Trade desk had a little pop. $58.580 right now. Tweezer bottom it open on the 1 minute. Rob's up on Mister. I'm gonna go get the air conditioner on. We got a rising wedge on Mister right now, getting ready to squeeze. Do you really want to remove the trend lines on the drawing? No. They just can't leave this baby alone. That's a sharp rising wedge. We got 3 white soldiers. Raises price target to 586 on this baby. It says here the digital assets are seeing strength amid investors' optimism following last week's executive order that permitted 401ks to invest in them. And that would be coin also. Mara and Riot. Merit and Riot being those laggers. I used to trade this at $6, $4 if I remember. Riot. Intel is meeting with the president. And Vegas called this one out to me. Said it should run. And it has. We've got a symmetrical flag on SPX squeezing right now. It can hit the 21, do a head and shoulders. So we'll get that ready. There it is. $6,400s. As we start to approach the 63 or the 6410s, but I'm going to grab me at 6,400 here. We hit the 200 earlier, so this thing could pull back to this wall right here. Or it can come back and hit the 200 EMA. Yeah, give me a 3 or 4 second lag on here, you derelicts. We just triggered my first support right there at the 200 right now. It's 560, 550. Okay, let's see what happens here. Wow, what the heck? We hadn't done that in a while. I didn't think them things could get that low. What's the deal? Looks like they updated the size of the oh, that's strange. There's the 200 right there. .60. I don't know what that arrow is. I got 460 and 560. Average $5.10. Somebody gonna have to tell me what that arrow is. Arrow, text arrow. Off. Much better. There's 560 right there, so I can get out with $100. We're at the 21. Let's break it. This is an exit idea. But if we break it, we got a head and shoulders up here. Kind of double top for sure. There's 590. $6. Let's go. Now we broke out of the resistance, so it's going to stagger around here for a bit. Okay, get ready. Take profit. I'll eat it up. 620. And of course it'll go to $1,000. Watch. snake breakout pullback. So that gives me 400, 450 altogether. 550 to go. What are these at now? 640. Why did you sell that stock, Jim? Because I was up. It's a beach trade. Anybody else take that with us? Him's got a big drop, according to Funk. Where's Michelle number 2? Good morning, YouTubers. Hit that like. If I don't get 10 likes today, I'm going to stop doing YouTube. That's a threat. So this was a double bottom. That's why I added on to that. Double bottom right here. My first entry was right in here. Then I added on. Off the 200. Then when we hit a double bottom, that's where I added with a higher low. Now they're at 660. To a double top. Chart patterns, moving averages, and data in the now. I gotta see what's on the phone. $6.90. There goes my grand. $7. Cockroach. I truly believe that a lot of. Go ahead. I truly believe that the fat cats missed the boat. That's why they're being so negative. Hymns. Man, that thing went 700. So it's important that you have your 63 also landed on the orb. On the 30-minute. We had a double bottom on the 1 minute on the /ES. So that 63 comes in very handy. Almost any time frame. You know, 2 minute would be a resistance level. 30-minute, it was on the support off the orb, which is double confirmation. Intel has a falling wedge breakout. I'm going to let it sit for a little bit. We just went under the VWAP on the /ES. I gotta get me something to eat. I haven't had nothing to eat all day. I've been up since 3. I mean, nothing. Now, where's my watch list? I did a watch list on the top 7. Tesla's and Microsoft are up. The rest of them are down. The highest volume leaders is Nvidia, Tesla, Apple. Apple's down $2.86. This watch list alone is just all you need, really. Jimmy called Amazon this morning. Back to the 60, to the 50 SMA and the 63 EMA. So we're going to put a snake on here. Set an alert for a double bottom. Thing pulls back and hits that top of that trend line on Amazon, and it could be a higher low, so you want to catch it off this head and shoulders right here, where you want to set that alert a little bit above it, and we'll get right here. Uh, I gotta change that color. That blue just not working for me today. Get a bright yellow. There it is, right there. For the head and shoulders. August 15th for Apple. They're not too expensive either. We have 33,000 contracts on the 230s. For this week, weekly. Strike is 230. So we're retesting with a tweezer bottom on the 1 minute. I should have grabbed him 187, but I didn't do it. It's at 193 right now. Put that up there. I got something in my eye.
So far, only run today.
That was on my watch list for a while. It had a recent stock offering, strong earnings, continue to steer the conversation. Maybe that offering closed.
I've been watching this stock for $8 a share, and everybody said it would move.
Huh. Well, I knew at 750. I didn't say it because I knew at 750 that certain billionaire was buying it every time it hit it. I don't know who it was, I can't remember, but he was definitely calling it out. We're at the 200 on the 5 minute on /ES for resistance. Let's see if we get a pullback here on SPX. Oh God, I don't even want to look at it now.
Contract really up that much. I've been watching the 6410s all morning long, and they're still at $3.30, which is what they were at the ES6470 anymore. So you've gone up 3 points, but the cost is going up.
Yeah, it's $7. This one's I was in, so I didn't lose nothing there. But we definitely broke triple top resistance. Now the way I chart this, I'll show you here. You'll probably pull right back to it. Use that body right there. Run it into that body. And we just broke below it.
Yeah, you just lost 4 when you ran all the way down to cruise control.
And we bounced off the 21 a little bit ago on the 1 minute.
Still looking for this 4 triple bottom. Yes. I'm not convinced that it's run this. I think it's just pretty people right now. See a lot of
Yeah, the beach trade. People just do a lot of scalping that first hour of the day. That's why I like, every once in a while I get stuck, but not very often. In the mornings when I get carried away around 2 o'clock, start buying the dip. I guess gotta let it settle. And after that, if I get into a trade here, I want to get something in my tummy so I have some energy. I got a Head and Shoulders also coming up on the SPX. That's right at the 63, so that's where I'll set my alert for the double bottom right here. You ready? I'm going to add. I'm going to do it. 5:30 for my first entry. We got a tweezer bottom on the crows. I'm just going to buy one more. If it right there. $4.90. That's it. Right to the 50. So we got 3 black crows with a long leg doji. Off the 50 SMA on the 1 minute.
Damn. What a candle.
Yeah. Nailed it. Okay, out. $6.10. Thank you very much. Are you impressed?
I mean, I'm impressed at how lucky.
Lucky?
Oh, so that candle was just normal in the middle of the chop zone, huh?
$6.40 now. I have the perfect chart. And that 50 SMA comes in handy. I didn't even get enough time to top it in before I pushed the sell button. Magnificent. Time to grade me. Very good. God, look at that. I said we're going to have a good week. 660. I hope your wife gives you back rubs.
Yeah, I don't hurt my back, my wife. I know better.
Double top. So I'm going to explain this. 670. So we got 3 black crows with the long leg doji. Google long leg doji off the 50 SMA with an engulfing candle to a double top. $7. See, I got out a little early there. 180. Left 180 on the table.
Yeah, AMD's got some shenanigans going on.
Three white soldiers. Closed with 3 white soldiers.
IWM is headed to support. With what looks like inverse head and shoulders. Masters back in support from pre-market.
They had Amazon. Amazon bounced off the shoulder. So you got a head and shoulders right here, inverted. This is the trick of the game right here. So it creates that right shoulder, and then when it comes down and hits the right shoulder again, that's when you want to take the trade. On the second time, now you'll see a lot of charts that just say one shoulder, but be patient and wait for that second shoulder. Then you'll have a confirmation. I'm I'll show you what I'm talking about. You look at a lot of these diagrams, they just have like a single shoulder. A lot of them do. And they expect the breakout to happen there. Well, I'm telling you, that's false information. Wait for that second pullback, and you'll be a lot safer. If it holds that second, see, there's just one shoulder. Very few of them in here have a double shoulder here. Single shoulder, single shoulder, single shoulder, single shoulder, single shoulder. They're all singles. Wait for that second pullback. And you'll take a safer trade. It doesn't have to quite hit it, but you know, as long as it holds that second right shoulder. See, here's another head and shoulders right here. Little initial breakout, and then it came back and hit that second time. Here's the same thing. Shoulder, shoulder, pullback on Apple. Now the video, it just went ahead and took off to a double top. I call that pullback too. The poison of the tongue, the power of the tongue. See, I let my tongue get carried away with me this morning, bad mouthing fat cats. That probably didn't put anybody in a good mood. Just upsets me when they do that. Apple calls, right shoulder, right shoulder. We got a triple bottom on ES on the 1 minute. They got a two-headed snake right now on the 1 minute. So let's see what we got here on the SPX. 470 again. Man, this thing is just giving me gifts. Look at her, 3 black crows off the 200. $4.70. We got my first entry. Now I don't know if this is going to be a lucky shot or not. My luck will run out here eventually. But this one's off the 200. 3 black crows off the 200. I should have waited for that next. See, that's an inverted hammer. That's bullish. Now, that's another thing. The books will tell you that 3 black crows is a continuation of a bearish pattern. I disagree. It's a tweezer bottom on the 1 minute with an inverted hammer. There's 520. So I'm up $100 right here with 2 contracts at 470. 530. Randy, we got a megaphone. Come on, you dingbat. Maybe I'm getting a bad battery in my mouse. I haven't changed it in a while. I think I'm going to put a new battery in here after I get done. Retesting the 200. So it needs to break out here. I just go ahead and stop out. Well, I'll wait for the 200 EMA just in case. We're at the bottom of the megaphone with the 1, 2, 3. Yeah, time's running out for me here. This is trade number 4. If you ever feel uncomfortable in a trade and we're green, you got to learn to get out. And then after you do so many, where's resistance to break? It's the 63. It's been established right there. We got any news coming in today? I'm gonna go cook me some chicken for my salad. It's taking its sweet time, and I'm not liking that. SPY back to 108. In the money, 108, the 637s. Okay, about ready to get stopped out here.
Hey, so Trump just said he's gonna freaking liberate DC. So he's hoping there's
Martial law.
and then the China tariffs going to affect tomorrow.
People are going to like that.
So be careful of that.
I went to Washington once, right after 9/11. I forget what they call it, the mall.
If you're sitting on the top of the big lap right now.
Yep, I'm about ready to stop out here. I don't think I want to add and get caught in that. Well, we're still holding the 200. Shit. Fallen wedge out of the Black Crows. Tough. Very tough stay in this trade right now.
Yeah, the EMA cloud is getting into point of control, keeps dropping.
I gotta clean this chart up here when I get done. Go ahead and have my lunch. Can't trade when I think about food. We're going to squeeze any minute. Trump announced a step to tackle homelessness and crime in Washington, D.C. Okay, I think I gotta get. This thing don't hold right here. We broke out. I got the call to squeeze, but we had a sharp knife to the downside there. Maybe it's just toying with me.
Oh shit. AMD.
This one's taking a little bit longer than I want it to.
Yeah, it's Jesus. She is killing it with those BMNR calls. God dang. I called him this morning, but I didn't have time to watch him. Keep eyes on Tesla. Tesla is about to push a resistance zone for the third time.
We're back at the 21.
And that EMA cloud is big green. not ready to pop actually. RSI looks good.
I didn't add on this. I should have added.
That's when I save your calls.
Yeah. We kind of held that megaphone.
Yep, it's about to pop. Just squeezed.
We got to break to 63 on the 1 minute.
All it's got to do is break that 343.50.
In their face, and I said, you tell them, you spit and we hit, and they get hit real hard. It's a disgusting thing. I've watched that for years, 3-4 years. I've watched them. The police are standing, and they're told, don't do anything under any such, so there's, and you can see they want to get at it. And they're standing there, and people are spitting in their face, and they're not allowed to do anything. But now they are allowed to do whatever the hell they want. This dire public safety crisis stems directly from the abject failures of the city's local leadership. The radical left city council adopted no...
You ain't gonna tell me something?
Oh, big dip, yes. Just hit free market low.
Yep. Now I'll start adding on. I didn't get out of it. Looks like we could hit Friday's low. I gotta watch that later on, that Trump thing. A little nervous to add right here, but I got 280. You got a little over $1,000 in this. think I'll get out of this screen. $3.28. I'm even right now, and we're at a resistance level. I don't know where that come from, but there's 340, 350. Tipped and get out of this trade. I went to Richmond, Virginia to be involved in a CD, making of a CD, and I had brought 5 gallons of homemade beer with me that I had in a 5-gallon keg. And I drank that all the way to Richmond, Virginia. Not all of it, but I mean, I sipped on it. And then after I made the CD, first, before I got to Richmond, I stopped at a what do you call them? Stop, where you go take a leak.
Rest area.
Yeah, rest area. And I stepped on a black bee. I'll never forget stepping on that frickin' black bee and having to walk around with that swelled up foot all the rest of my vacation.
Why were you barefooted in a rest area? That was your first problem.
I just drove without my shoes on. I carried them with me, I just didn't put them on. I forgot, there's something big going on that veterans, I think it was a veteran. Something big was going on. I can't remember what it was.
I can't shake this feeling, like looking at the 5-minute chart, I can't shake this feeling that they're going to run us down to that 63.88, 63.87 area to go pick up those contracts and that fair value gap that we left behind Friday.
Well, we're going to see if this retest holds. But you might be right. Yeah, I'm down $112.
not trading on these hunches because I just started like really using fair value gaps last week, so I want to lock them a little bit. But from what I see, market makers don't like to leave contracts laying behind.
We're back at the orb on the 1 minute. See if we can hold this, but if we don't get a breakout here, I'll call it a day and make my lunch.
Notice also that you only have 2.5 minutes to the rollover.
Yep. Let's look at the 30-minute on here. Barely read it. Oh, my tea. I left my tea. Oh, damn it. No, I didn't. I didn't drink it. I guess I did.
Rich, you know where gamma exposure is?
This is a major support. Yep. And that's the head and shoulders. Yep, here it dropped. I knew it was,
Just down the road.
spies a double bottom.
I'm not stood yet. I'm sitting right now. I don't trust anything today.
This is trade 4 for me.
We're under the orb, we're under the EMA cloud. I still see that fair value gap way down there.
There we go. We're to a double top right now. If this is an exit idea here, but I'm not green, I'd be down $100.
Yeah, 64.12 is bottom of VWAP. Like you can scalp the occasional pops today, but that's not what I'm trying to do today. Oh shit, I'm not sharing my screen. My bad, y'all. Y'all have to get on me when I'm not sharing.
triple bottom.
No, Randy, I'm not getting any calls until we reclaim the EMA cloud. Right now, it just keeps pushing us down. You get a pop, you get the occasional pop past the EMA cloud, but you only go to VWAP bottom, and then you get slapped down.
Tesla holding up well.
Yeah.
About ready to squeeze on it. Down. It could go down.
Yeah, people are rushing to buy them because that EV credit is expiring.
Yep. Jimmy's holding his hands again, praying. It's lunchtime. Let's go.
Trump's still talking, which may be part of your problem.
Yep.
A straddle tonight might be a good play. Rob.
Need 269.
With the China tariffs going into effect tomorrow. They'll either go into effect or he'll announce some kind of treaty, but either way it's going to move the hell out of the market.
We're at a squeeze point again on a symmetrical flag. There we go. I can get out here with 260.
You're at the 9 on the 5.
We got a triple.
64 and 11, 75.
Yeah, I'm at a triple top right now in this flag. Just one big little bitty candle. Let's stop getting greedy and get out of it even. We're at a resistance. Come on, just one little. We're definitely at a triple top. That wick's right on that line. This fucker breaks.
Okay, there's your VWAP bottom.
We're at the 50. I mean, I'm having so much difficulty staying in this trade. Right there we go. I know I'll regret selling this. I'm gonna push trigger because I just can't take it. I'm not feeling good about it either. $3. Give it to me. Out. Trade number 4, green. Watch it go to 5. I'll be so upset. There's 320. Shit. I don't know if I'd have got it, but I definitely got 3. We're to the 200, so yeah, there's 320 right there. I'd have had it. Deadgum you. Oh well. I stuck with it. That's all that matters. It's hard to do when you're down. 8 contracts out at 3.
Intel's up 7% today.
Fuck, 330. Can you imagine that? $60 times 8. We hit the 200, so that's definitely an exit idea. Was anybody stuck in that with me? No. I'll give my.
Rob, did you get those sound calls? Please say you did.
60 times 8. $480, almost $500 if I'd have held it. Well, I say I got lucky again. Wouldn't you?
You played it off support, so.
Yeah, but I was in it for quite a while.
Yeah. Some days be like that. This is a chop day, man.
In it for about an hour. Seemed like an hour. Now I'm gonna go.
We've only moved 2 points outside the orb in either direction.
Yeah.
Better send a wait and see pattern for China tomorrow.
Yep. Well, that's the sweet spot. We got 1, 2, 3, 1, 2, 3, and it broke out of the sweet spot. So if this thing breaks the 200, I might jump back in it. But if it breaks it, it could come back and retest the 200 and then take the trade. But I'm going to go ahead and make lunch. $240 I got out of all that panic. Now we're at 320. We just broke the 200. So wait, see if it comes back and retests the 200 before you jump in, unless it decides to go ahead and run. But I'd wait. And there's 340. That would have been, darn it, it was $600. Okay, I'll be back. We pulled back and hit the 200 there. We got undecisiveness right now. We got a long leg doji and inverted hammer. There's 340. Ah, darn it. Watch, all of a sudden it jumps up to $5. Wait for your setup. Wait until you're comfortable to take the trade. Choose your bottom on the 30-minute /ES. We got Tesla up 1385, Microsoft up 356. We got more green in the Magnificent Seven. And if you want to trade them all, you trade MAGS. There's a knife right there. I'm happy with what I did. I mean, it wasn't easy. TTD I think Fat Cats were just wrong on this one here. SPY's flat from yesterday's close, down 9 cents. Mister up $16. I'm going to lunch. I'll be right back. Always clean. May I help you? Back at 255. Holding the old resistance, the triple top. It's 25 cents. Boom. 255 to 3. I got my money. I'm happy. I'm a lot happier now. God darn it, 340. Might go back to the top of the orb. So we retested the orb. I'm having my famous chicken salad with a cheese chip. Man, 370. Left 350 on the table. Oh no. God, look at that. We're about to hit resistance on the slash ES. 410, shit. $550 on the table. get resistance. Yep. Damn. Man, I just left a lot of money on the table. Did anybody see that coming? I did. So I jumped back in it, but I didn't expect it to happen. No. No. What do you think about that, Rob? No. No. 490. This market's bullish. Can you imagine how much more shopping it would be if Trump just cleans up DC with all the homeless and all the crime? Start throwing people in jail. They have the highest rate of car thefts. People are afraid to go out on the street at dark. Even the black Democrat was all for it in Washington. Okay, we're double topping that there Fibonacci. The puts are the 63.90s. 6,400, man. They're at 8 something. They're really buying in now. Narrow gains, what are you talking about? That's 6405.31 next on the Fibonacci extensions. There it is, 3 white soldiers. The 6390s at 220 puts. Go. If this doesn't work, I'll get right out. Drop. See if it respects the third crow here. Third soldier. Okay, well, that's done. Finish my salad. $235. See if it gets to the 21. Or that right there. Might be all it takes right there for it to pull back. Whoa. about to hit my support. Not paying much. Oh. Come on, give me 50. I'll take that. Give me 250. Be nice to come back to this resistance. There's definitely a support here. $240. And again, I'll sell it. Never drop. We're squeezing now. We're bouncing off the 21. She's not as cute as she was when she first went into the office. Stress is getting to her. God, I want that car. Wish I still had it. Reversed. Will we hold the 21 or should I get out? That's the question. That's the question. I was tempted to go in there and have a burger, but I think I'm full. AMD hit the 200. Triple top on Meta. We have a yin yang on Apple. Oh boy. We're flagging out again. Could be coming up to a double top. There's your 1, 2, 3 at the top, and 1, 2 at the bottom. It could pull back one more time, or it could break out here. Oh shit. It's not. I'm even. That ain't right. A bunch of crock. And there's $2.50. Now Jimmy will sell it, never drop, like a drock. I'll take $50 a contract. Woo! Yeah. I'm out. 285. Where's my grade at, please? You all thought I was making a big mistake, didn't you? Say it. Someone say yes. Does anybody in the room think I was making a big mistake there? Come on. Somebody. Angel said no. She has faith in me. Zippity doo dah, zippity day. Oh, Jimmy, you are okay. I don't know how you do it, Jim, but someone today said it was luck. Am I correct?
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snakes slithers past the rest, breakout moves, he plays them best. Jim likes titties and telemarketers too, teaching fools like me and you a work of art. The strategy's tight, Washboardjim and the trading fight. Pullbacks come, then the charts will rip. He calls the shots, never loses grip. Selfless soul with a heart of gold, teaching secrets that never get old. Jim likes titties and telemarketers too, teaching fools like me and you a work of art. His strategy's tight, Washboardjim in the trading fight. Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and telemarketers too, teaching fools like me and you a work of art. His strategy's tight, Washboardjim in the trading fight.
Oh, yeah. Oh my gosh. There I go again. $3.40. I would have made $600. Okay. Oh, God. 430. Are you kidding me? That'd have been $1,000. I don't know how he does it, but the guy has scissor hands. He likes titties and telemarketers too. Unbelievable. 440. Too much. God. Jim? He likes titties and tell $5. Tell the marketers to. $5. So that would have been 280 times 5. $280 times 5 would have been $1,400. Oh God, 550. Why? Why me? 560. Oh no. I think I left at least $4 or $5 grand on the table today. And I just had a little over, I had 1,100 in that one. They're at $5. Oh well. That's my life story. That's just beautiful. Anybody get stuck in your calls, or did you all get out? Because we're at the 50% pullback, and for this thing to stay bullish and move back up, we need to hold 6391.94. And that could probably be adjusted, because that's from right here. So I don't know if I could use these Fibonacci's anymore. Let me reuse it. A 50% pullback from when we had the break, when I charted it. So now we'd have to break the 50. We'd have to break the orb. Tell marketers to. You're stuck. We got to break 639626 on the SPX. You telemarketers too. I don't know how he does it. I'll tell you how I do it. When you make your salads, use zesty Italian dressing with no sugar. Fry your chicken on an iron skillet, one side for 5 minutes, and the other side for 3 to 4. Make sure you put a radish in it for good luck, with a half a carrot and a quarter of the size of a cucumber. And top it off with feta cheese and 4 black olives, along with a little bit of romaine lettuce. Then for good luck, make a cheese chip in a waffle maker. Did I say 96? Yes. 36.96. Oh, 63.96. Oops. And I'm not even stoned. Now we're coming back for the double bottom. Snake, breakout, pullback, double bottom, triple bottom. So it has to hold here at 36.9203. Tell the marketers to. $63.92.06 has to hold. I love that decaffeinated tea. Would anybody like to drink some with me? Well, 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 well. Heard NVIDIA's worth $4.5 trillion market cap. We have a falling wedge. We're at the previous support level right now. What was resistance here could become support. So Jimmy's going to be looking at calls. He's looking at, that's the SPY. Don't want to do that one. He's looking at the SPX 6400s here at $2.60. Do you have a problem? Do you have a problem? Is there a problem? The crowd doesn't know what to do. Jim jumping the calls may be a little too soon. We're developed head and shoulders on the 1 minute time frame. Can he get lucky? That's the question to ask. $3, baby.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snakes live past the rest. Breakout moves, he plays them best. Jim likes kitties and telemarketers too. Teaching fools like me and you a work of art. The strategy's tight. Washboardjim in the trading fight. Pull back, come in the charts with a whip. He calls the shots, never loses grip. Selfless soul with a heart of gold. Teaching secrets that never get old. Jim likes kitties and telemarketers too. Teaching fools like me and you a work of art. His strategy's tight. Washboardjim in the trading fight.
Break it, break it, break it, break it, break it, break it, break it.
Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and telemarketers too.
That's
Teaching
true.
fools like me and you a work of art. His strategy's tight. Washboardjim in the trading fight.
Yeah. Yeah, I can hear you. What you got to say? Oh, you got a meeting going on. I was in SPX. Do. Drink some Long Island teas. Telemarketers too. We're down to $2. We're at a double bottom. This has really got a hold right here. So I'm going to jump back in them. $2.05. I just love scalping. Fast scalps. Come on now. I don't even want to look how much them calls are worth. Telemarketers too. Okay, we've got to have a little turnaround here. God. Calls are $6. Oh, I had the other ones. Oh my, that's even better. On the puts. Hike. Can we get an end of day rebound? Well, if this don't hold up very much longer, I'm going to get out. What time is it? It's 12:20, so I'm at that stage where I start. But we've had the pullback, and I played the puts. Now I played the call once, and I'm playing another one. Funky, your chart's not on, just in case you know. Back to even. We're at 205. I did not buy the dip. Rob. Oh. Hike. Now I'm green. 210, 15. I need more than that. Telemarketers too. I don't know if I can sing that song. I have to practice a lot before I can get it right. Did you like that, Robert, on YouTube? I'm going to start doing little videos of patterns and stuff, and I'm going to play that music while I'm drawing it out and then explain it. Like why I took these puts, maybe. Yep. Court, DOJ must show spending data. Back to 195. Kind of got a W pattern right there. And the 50's in the, is that the 50? The 50, SMA. I'm still in these calls. Oh, Oklo's earnings are after close. We got a triple bottom on symmetrical flag on SPX. There's 125, so I'm going to be watching these add-ons here. It's just that wrong time to be trading right now for me. Ooh, look at that. I'm going to clean this up, see where we are here. We could drop a lot more. We almost had a double bottom. We've got a previous resistance right here. And that's right at where we are right now. And that's on the 21 on the 30-minute. That's a triple bottom on the daily. We definitely had a triple bottom here.
Pickup for decades, right? It's been the top selling #1 inarguable, but recently it lost that that rating, that space to the RAV4. So I think that call out there has to do with that. They also mentioned they don't have a front, similar to what we know how a Tesla has, but also obviously a truck bed as well. In terms of market positioning, what they're saying is there will be a lower 5-year ownership cost than a used Tesla Model Y vehicle, guys.
Yeah, and I think a really good point there, especially because Ford still has some of the best-selling. I believe it still points or has the title of the best-selling vehicles in still the United States. I believe it's their F-150 series. So that is the least last year, but they still have a huge dominance in this auto space. It's not just the newcomer EVs that we so frequently talk about, because trading these names are a bit different. But look at the road landscape. I think it depicts that. Appreciate it though, Dan King Hall, for all the insight. And now here to shift gears and talk more about the latest in the overall, IPO and M&A space. I'd like to welcome in Christian Munafo, who's the CIO of Liberty Street Advisors and the portfolio manager of the Private Shares Fund. So thank you so much for joining us today, Christian, and really welcome
What's she done to her hair?
Of late in this ever-evolving, ever-scrutinized, frankly, IPO landscape.
And it's great to be back with you. Look, we continue to see the sentiment from investors continue shifting to the positive when it comes to this private innovation economy, as we call it.
Call it what you want, because you're wrong. We got a 1, 2, 3, 4 to break. One, two, three, four, with a falling wedge, falling megaphone. MJ moved up pretty good today. $5.
Even a life that's rich with meaning can take an unexpected turn.
7-foot tall woman. May I have your autograph, please? Can we go out and have some coffee? God. She's only 7 foot tall. God. Oh my. That horrible. Monday.com. Anybody ever heard of that? Jesus. Up. Yeah, what's up? I was getting worried about you. You didn't answer, or you probably weren't looking. Oh, you're sleeping. Did you have fun yesterday? I guess. Yeah. What? Yeah. Was it a fishing lake or? Did he? Yeah. Sounds like fun. Yeah. I just want to check on you, see if you're okay. Well, just had that instinct. You had instinct. I better call you. Okay. When are you going to be in Springfield? I called Mom yesterday. Yep. Okay. So she's getting up earlier and going to bed earlier. Yeah. That sounds good. Yep. Okay, I'll let you get back to what you're doing. Okay. Holler at me later. Bye. That time of day. Watch for what? Fair value gap. We could have a pretty good correction in this market. Not saying we can't. We've had a pretty good run. You can go back to the 6380. Is that where 6380 is? 89. Yep. I see that at the 200. On the 30-minute. We got a triple bottom on ES on the 1 minute.
No offense, but if you paying more than $30 a month on car insurance,
Ooh, slashy yes. We're about ready to break a resistance on SPX. Or we're close to it. Still kind of descending triangle, but could be a bottom. Well, decided not to break. I was waiting. Oh. And we got another hour, 40 minutes. How's Richard doing? Going to be one of them end of the day runs. We just now broke out of the flag. I like how this shakes people out. We just hit the 63 back to the orb on the 1 minute on SPX. She's boogieing. This is a major resistance right here. That's 100% from the bottom. We're at the orb, and we're at an overhead resistance. Two of the same kind of flags, one and another. Here we pull them back again. Now if we hold this support level, the 63.90s. Okay, we're back at the bottom again with two engulfing candles, the 63.90s. $2. SPX. I gotta put a new battery in this thing. We're at 235. Let's go. 240. $265. 280. Take some profit off the table. $3. If we break this thing gonna fly. Rob. 320. Let's go. We got a double top. If that gets there, I think we can get here to the 200 EMA. Now you take out, get it out now. Those are your next two resistance levels. Oh, it dropped down to 215. Heck. Yeah, you can't play games today. You got to get in and out. going to make the third trip to the orb. Back to 270. Big drop. Tilray has a new high. Big knife on SPX. So that's called a descending flag. Now it's playing it in between each one of them trend lines, but this last one. The 6390s now are 1380. All I had to do is hold them puts all day and I'd be rich. They're at $1.
do you like? Stock picks. Tell me why NVIDIA, which everybody loves, and we've seen everybody love it, and it moved to new highs, and we have NVIDIA in the news today. How much higher do you think this name could go? Because when it hits highs, we say how much higher? I mean, it continues to break out. I'll look at and tell you the recent high. So the recent high was 183 and change. It's at 182 and change. It's sitting at the highs. How much higher?
I think NVIDIA can go much higher. It can go past $200 a share. If you look at the earnings growth and the sales growth for NVIDIA compared to the PE, it's at a discount to the S&P 500 overall.
Whoa!
NVIDIA is the core AI play, so it's the most direct pure play on AI. If you're bullish on AI, we are, then you need to be bullish on NVIDIA. It's in a technical uptrend, testing new highs, very strong chart in a very strong sector.
You also have GE Aerospace, right?
Yes, GE Aerospace, same thing, very strong stock. They're in a very hot theme right now. Aerospace and defense has been a leading sector in 2025. There's bullish tailwinds there. GE Aerospace is making new highs. It's the largest stock in the industrial sector, and it's really a market leader also breaking out.
Right, understood. I mean, big picture, you expect the S&P, triple Qs, everything with new highs, just quickly, this year?
But tomorrow, it's based on CPI. A hot CPI, we pull back.
Oh, tomorrow's PPI.
Make new highs this week.
Larry Tentarelli, Chief Technical Strategist, Blue Chip Daily Trend. Thank you.
Thank you.
There's 50 cents right there.
We'll bring in our panel to discuss the Mag 7
right on
tech
my
earnings,
support.
all the names
Spy.
and the future of AI infrastructure investments. The watch list. We'll be right back.
Watch out. $0.70, 170. The long-legged doji on the hammer.
Whether you're an experienced investor or just getting
I'll be right
started,
back.
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your
Yeah,
stocks?
I do.
Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Good job, Rob.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At
Yes.
Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to the watch list. We bring in our panel to talk all about the Mag 7 names, Austin Lyons, Senior Analyst, Creative Strategies, and Ivana Delevska, Founder, CIO, Spear Invest. I'm so glad you're both with us. Ivana, I'll start with you. Some of your thoughts on these tech names. I know you own a name like NVIDIA, I believe, for example, but do you like the group overall?
Well, Nicole, I think what's interesting in the Mag 7 is that there is a bifurcation between business models. So while during the prior tech cycle, you could really buy any of them and do well, right now each one has its own story. So if you look at it, we really focus on returns on invested capital. So NVIDIA screens particularly well because they really don't need to invest a ton of money and they're printing money on the other side. Some of the other ones like Amazon and Microsoft, they need to invest significant amount of capital to be able to keep up the momentum on the earnings side. And then Tesla, Apple, all of those could be very interesting, but there's still a little bit of show me stories here in terms of how they position themselves for AI and whether for Tesla specifically, it will gain broader regulatory support.
Yeah, and we saw Apple last week running as Tim Cook has been working with the president. What is your big picture here, Austin, as you take a look here on some of the themes, because you want to really focus on the monetization of AI? I mean, the feeling really is that Microsoft has been doing that. You tell me, is that right?
Yeah, definitely. CIOs are reporting productivity gains, and so we're seeing the inference era happen. And how are companies monetizing that? Well, for Google and Meta, it's really about just monetizing their core advertising business. And then downstream for players like Microsoft and Amazon, it's from a cloud provider perspective, being able to go to industry and rent them GPUs. Now, to Ivana's point, now we're starting to see this bifurcation of stories. So for example, Microsoft Azure is doing well, Google Cloud is doing well, Amazon's AWS is falling behind with the Gen AI. They don't have enough GPUs, they don't have enough power. And so there's still opportunities here, but it's not as simple as just invest in anyone and it pays off.
Yeah, you said Amazon and Tesla are facing some challenges. I mean, you had sort of the Tesla Apple show me story that Amazon needs to spend in order to do well. You had some names that you did like, Ivana, that I was interested in to hear. Astera, Arista Networks were in there, NVIDIA, which we mentioned too.
That's right. So we really like investing across the value chain, and specifically for data centers, we think there is going to be a new wave of investments coming. So the prior generation of NVIDIA chips was going into existing infrastructure. The next generation, the Blackwell system, will be all new infrastructure. So this is where you really want to be invested in networking, you want to be invested in power generation, just broadening out from just few stocks, right, to where the real alpha is going to be generated.
Yeah, understood. I mean, these names, for example, when you saw Apple getting a jump in and getting some attention here, Austin, does it become more interesting to you or not necessarily?
Yeah, Apple's story is really about bringing generative AI to the on-device experience. So how can they reimagine what phones are in a generative AI world? And so, I think Apple has a lot of growth potential, but they're still trying to figure out, both with Apple Intelligence, how do they make that experience better for consumers? And then also giving developers the ability to build that on-device experience into the long tail of apps that we use beyond just those core first-party apps like Messenger or Safari. So Apple, there's a lot of opportunity, but they still haven't quite figured out what that means. And then there's growth opportunities for them like smart glasses and AR as well.
And also, I think you both have been watching Alphabet, Google too, but you noted the growth, that it's a leader in growth. How so, in your opinion? Do you think that they will still continue to be a leader in growth?
Sure. So Google's business is all about ads, and everyone was concerned that with ChatGPT, customers would start using ChatGPT instead of Google search. But what we saw the last quarter was the opposite. Search is up, search revenue's up, and Google's actually showing that generative AI helps the advertising experience. They can make a better targeted ad. It can speak more to customers. It can understand their intent better. So as long as Google continues to figure out in this new generative AI era, how do they own mindshare and make that experience better, they should be able to continue growing and increase those prices for ads.
Yeah, and I think you both are interested on the return on investment, because that's the story. How much are they spending? And at first we were balking at some of the numbers, and now it's become very commonplace. And that was part of when we kicked off earnings season. How much are they going to spend? How much more are they going to spend? Tell me a little bit more about the spending. I mean, NVIDIA, you said they don't have to spend quite as much, and this is a name you love. But I guess that's something that's going right for NVIDIA, right?
That's right. So, for example, somebody like Google, I think they're going to have to up their capex one more time going into year end, and they're likely going to grow even more this year than last year.
Right.
Somebody like NVIDIA, they've already made the investment over the past 15 years. So they're really, from capex perspective, there's some R&D involved, but they're really not like building anything, right?
Are you concerned about the revenue, the 15% to the administration?
Not really, because it is actually aligning incentives a little bit. So I think they're going to be able to sell more chips and more powerful chips, but they're going to have to lose some on the revenue side.
Great to see you both, Ivana Dalevska and also Austin Lyons.
What?
Thank you both for being with us. I'm Nicole Pedalides. Thanks for being here with me on the watch list every day at 2 p.m. Eastern Time. You can join me at 2 o'clock at 9 a.m. each day here on Schwab Network. Have a beautiful afternoon. Market on Close is next.
Back to 170.
Schwab Bank Investor Checking. The
This
checking
time we
account
broke the
built for
63.
investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With it,
I don't know who you are. I didn't get that last one. That'd have been nice. It's a weird day. It's starting to be a weird day.
Yeah, I only took one trade today.
What's that?
I only took one trade today.
I took about 7.
I took that sneaky snake that happened between 115 and 125.
Yep. On SPX?
On ES.
Oh, you took the ES?
Well, I mean, I took SPX, but the sneaky snake happened on ES. That's the only chart I watch. It might have happened on SPX as well, but I only watch ES.
Yeah.
But it started at 116, so was that 45 minutes ago? Snake down, look out, look back, look higher, and freaking had that guy again on the line.
Yep.
I'm gonna train myself this one minute. hard because I'm like my 15-minute hits.
Use that as a reference tool. I mean, like you're looking at the 1 minute. And I'm going to check the 30-minute just to see where we are. And I like the 15-minute. And then on the 5-minute, this last trade, we had tweezer bottoms on the 5 and the 1 minute and the 2 minute.
You were watching the 15-minute, you saw the tweezers bottom on that.
Yeah. She's looking like a vacation girl today. PSKY. Pot stocks are doing good today. TLRY. Man, what time is it? Oh, it's 8 minutes after power hour. PPI tomorrow. It'll be peace. Do. Oh, I gotta watch my. I might took my eye out the ball. $63.90 calls. Jimmy's looking at him again. I missed that. Dip. We're at a double top right now, Rob. I'm gonna wait for the calls.
Oh God, I'm so conflicted right now. Dude, I'm so conflicted. We are sitting right at pre-market low. That's the negative. Like we're held under pre-market low. But on the 2-minute, I see my curl, and I see us trying to push through a 5-minute trend line that we've been in for 2.5 hours.
Yep.
Oh my God. This thing could go either way.
We got a head and shoulders. Right about now, they're at $105. I'm gonna give it a shot. 63.90. 63.90 is at 105.
It wants to break that trend line so bad. There's so much resistance above it. You got pre-market low, you got 63 on the 5, you got 50 on the 5, you got freaking bottom 4, all within 4 points of each other.
Yeah, and we're still kind of overbought.
Master is back in the support zone. Oh, Master redemption.
Better hold right here.
Master just double bottom.
Your 63.75 puts did well. Times 15 after.
I have at least try Master. Don't I, guys? Don't I? And that's a pretty setup.
Ah, darn it. There's your 100% on your 63.75s.
Oh, yes, my bad. I see what you're saying. You just pull back to the golden bid.
Well, this could be my second red trade for today.
Damn it. Missed that one because I was looking at Master. Shit.
Darn it.
Might be time to turn on the 15-minute candles.
I don't know if we're going to run back up tonight or not. What's it, 5 minute? 5 day. We pulled back on the 5 day, 5 minute at the 200 EMA, and we could retouch that again. And that'd be a 1, 2, 3 confirmation. So yeah, I'm not going to add any unless we get back to my entry. Or unless we dip down to that. I'll buy 100 of them if I have to.
Look at the ES 30 minutes, then you would see.
See a long leg doji.
Now look at the pattern since yesterday.
See it bouncing off the 200. I'm getting back up there on my trade. I'd like to see it break so I can get 100%. I'm not sure what I'm looking at. A yin yang. I see that, which is a yin yang, a triple top support. Is that what you're talking about? From yesterday?
Yep.
Yep. Almost back to even. Dang, I should have bought the dip for 50 if I could have got it. I'm even. Now what?
Back at the bottom of the orb on the 15. I'm sorry, you're back at pre-market low on the 15.
We're at the 63 on the 1 minute. SPX. So we got to break it. And we have a fallen wedge with a inverse head and shoulders with a three-headed snake. Yeah, I could have got that at least 60 cents. That would have really put me in the money. But I said I wasn't going to buy, so I didn't. I'd have bought 20 of them for 60 cents. 1,200 bucks. Dad, how come Grandpa doesn't sleep with me anymore? Well, we have a freaked out family. There's Grandpa. I would have slept with you too, honey. Oh, she's talking to that funny guy. This guy here, he tickles me.
Go for the three on the top of the list. the companies that didn't perform well are Amazon.
Or AWS. I mean, they're trying. Let's focus on the positive, though.
Okay.
What was it about Microsoft? And let's talk Microsoft and Meta first, and then we'll talk specifically about Palantir. But what about their
He's
reports
creepy.
that you think were so strong?
So, Microsoft has this cloud we call Azure, and very high. He thinks only they know, nobody else knows, right? And those whisper numbers are pretty high going in, and Microsoft beat those. So what's happening is Azure is taking share from AWS. So that is good. And then of course,
Okay,
Microsoft
he made me
Copilot,
smile.
which some of
I just think he's the goofiest one of them all. I mean, not in a bad way. It's just very strange. Retesting the shoulder line again of the three-headed snake. And it can drop down more. If it doesn't hold this, we definitely got another $4 dip. So, let's see if we can get a bounce here. Unless they're worried about that CPI. There it is. $0.55. Risky. That guy's so weird. PLTR pulled back. Had a new low just a little bit ago. PLTR is on path to a $1 trillion market cap. Yep, now I start to worry. It's definitely been a scalper's day today. And then if I'd held them puts, I'd probably made about 10 grand. Oh, here we go, right there. Right where I said we would. $36.95s are now at 15, and $36.90 puts are 10 something. Let's get a rebound, please.
Range, and
make
so
me laugh again.
Put stops and targets based on just we do it 7%, 10%. What we do is something unique. We look at money flows very, very closely. So we look at where the money was flowing in Palantir at which levels. And those levels act as support. But nobody knows that, right? Because everybody's looking at the chart and the lines, which are visible to everybody else. So the smarter players kind of play with it because everybody knows. But the way we do it, nobody knows, right? Because
You're
we
a
have
liar.
Proprietary money flows. We're looking
We
at where the
know.
money was flowing. And the market has kind of a memory, right? So that's how we use our stops and so on. So start a trade on position, have a core position, trade on position, have some risk controls. So that's, I think, how people should do it.
Well, thank you for being with us in studio today, Nigam, to talk tech earnings. Always a pleasure to have a tech conversation with you. That's Nigam Arora from the Aurora Report. And coming up, we'll have Options Corner. Kevin Green will be joining us for the levels that we need to watch as we head into the close. We're back right after this.
You get a makeover? Oh boy. Tilray bounced off that pullback that I mentioned at the 21 to 91. If this thing breaks $1, there's some big Big lots coming in here. Big blocks. And there's some selling too.
We did actually highlight the 6370 as the low area of potential support here for the market, your first major area of support. There's actually a put spread that's actually been sold at 6380, 6370 put spread that was sold earlier this morning is pretty much what we are testing at right now. If we're able to kind of break above and close above a 5-minute candle, close above that upper resistance line on that chart, then that could actually be your reversal signal. But we just look a little bit heavy kind of going into the close. We had some situations here today, even breaking above that 6400 level. We had this inverted hammer that took place,
336
here at the top, and you started seeing a little bit of a fade. But actually about maybe, let's say 30 minutes ago or so, we actually had a pretty decent bearish candle, and then right next to that a bullish hammer. So coming back, potentially retesting that hammer candle level, or use that opening level there, and then trying to push higher going into the close would be ideal. Any further breakdown once again of 6380, you're looking at 6370 as your first major area of support for today.
And Kevin, as far as seeing, as I'm looking at your chart here off to my side, having the inverted hammer earlier and then the bullish hammer, do those signal anything more specific? Are they both bullish signals?
No, so the inverted hammer is actually bearish. So you start off, you try to explore new highs, and then we're looking at the intraday section. Obviously, you look at new highs, you actually fail the opening print of that candle, and you close lower. That's really what creates in a reversal candle. In the bottom hammer that we kind of talked about there after that bearish move to the downside, once again, is actually very bullish. You start off low, you actually push a little bit lower when it comes to price, and then you're able to exceed the opening print for that candle and close higher, which is that's a bullish sign here. But obviously, this is an intraday 5-minute chart, so these candles don't carry as much weight as, say, a 30-minute chart or an hour chart or 4-hour chart. But on an intraday basis, if you're like if you're an intraday swing trader or intraday day trader, what have you, these are the charts that you're really kind of looking at. And generally what we usually do see, especially when we have these rip rallies going into the close, is kind of a double bottoming type of pattern, coming back, retesting these previous areas, let's say 63.75-ish or so, retesting that, having buyers really stepping in, breaking that upper channel line would then give you the confidence that we could have a bull run going into the close. One thing, if you're looking at the S&P 500 options volume today, it's actually very heavy. We have around 4 contracts right now trading over 100,000. Probably 5 contracts will trade over 100,000 contracts being traded for today. Probably in the next 5 minutes or so is fairly close, around 3,000 contracts to go. That also can constrict or really try to compress some of this price action and doesn't really signal that we may have a major flush. Who knows? We'll
See what? You froze on me, man. Brother?
Focusing on, and that could actually provide us that gain and to continue to make new all-time highs here, or if it does come in hot, potentially breaking down and looking at a pretty decent or significant reversal in the S&P 500.
So some heavy volume as well. What else are you keeping an eye on as we head into the end of the session? What else stuck out for you on the day?
Yeah, if you're looking going into the close, looking at the S&P 500 versus the NYSE advanced minus declining stocks here, this is something that I look at for days just like today, where we have a really decent rally going into the open, and then having an intraday high, and then pretty much a failure of that high. Going into the close here, what you want to see is that white line actually moving to the upside. That's actually the VIX chart versus the S&P 500. So we're going to look at the NYSE advanced decline chart here if we can. But basically, you want to see market breadth kind of expanding. You want to see advancing stocks starting to catch a little bit of a bid going into the close. That will give the S&P 500 a little bit more boost to the upside here. Also, this morning we were looking at the S&P 500 versus the VIX. The S&P 500, if you're looking at the E-mini S&P futures, it was actually in the green this morning, as well as the VIX. That's something that usually does not happen. And if we do see another day like tomorrow where that type of behavior is happening overnight, I would get a little bit cautious about that, especially post-CPI print. That could probably lead to either a fracturing of volatility to the downside or looking at potentially equity markets pulling back as well. It just appears, just based on pricing, as we talked about on Friday, Marley, that volatility is still relatively cheap given the events that are on the horizon here. So probably a little bit easier to re-rate vol higher than it is to continue this correlation of VIX up, stocks up, which was pretty much happening earlier today.
Well, Kevin, we appreciate you breaking all of that down for us. I liked having you in studio, but I'm sure glad to be back at home. Always good to see you. Thanks again, Kevin Green. And coming up, we'll discuss the Bitcoin rally back up near all-time highs, what to expect from the oil market ahead of President Trump's meeting with Vladimir Putin, and more. Stay with us.
Vladimir Putin. You know, Caroline.
When it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me
How
too.
rude.
Let's move on, shall we? No can do.
Look it up.
Quit picking on Carl's Way. We had an explosion on a U.S. steel plant in Pennsylvania. The knife. $247. Well, I'm done for the day. More knife. New day low. Took a loss there on that. Blotch. We're down almost to hit the 50 now. And that'll be yesterday's opening price. If we open there tomorrow, I'm going to put a price line just straight across. That'll be off the 200 on the 30-minute. $63.54.80. Then we got a huge gap below that, which would be a strong buy, and that'd be the 200. Oh, that looks better. $63.39. If we come down and touch that tomorrow. I like that a lot. That one.
That's where they're pushing it to.
63.39, 63.40.
I'm talking about on the ES. I'll give you a hint.
63.80.
63.90 fair value gap I pointed out before we even opened the day.
Yep. That's the 200 EMA on 30 minute.
They want those contracts. There it is.
What time is it? Now I got 7 minutes. I don't even want to take a chance. But you're right on it. Right on that.
One minute left on this 5-minute candle. If this squeezes bottoms, I'm going to freaking drop.
God, 63.90s went to $2,000, 2,200.
Some of them won't stay still long enough for me to grab one.
That dropped depreciating. I'll just wait till tomorrow when I'm live. Another green day, but 2 red trades. Out of 8, 9.
Come on. Alright, I'm out. That's 50%. Holy shit! Of course it goes to $1.40 as soon as I say that.
63.70s.
Yep, I was in the 63.70s at 70 cents.
Very good.
And now there it goes. Good deal. Love myself. $1.95. About 5 minutes. We just on them. Still check it out.
Yep.
Oh man, 2.85. $4. Cool. I like it. I'm just gonna go hang myself. 4.80 from 70.
Perfect timing. Alrighty. Well, that's it. I'm pooped. I'm actually wore out.
Good job, guys.
Yeah, I'm gonna go try to take a nap. And I'll catch y'all later. Tomorrow we got CPI. So we'll figure out, see what that does for the market. Adios, amigos.